Hello everyone, welcome to Oliveboard. Today we are bringing a very important session for you. We have compiled all the four modules for your CAIIB BRBL paper, all the Macmillan book questions in one video. So starting from module A, B, C and D. All the units have been covered. The questions from 34 units have been covered, the Macmillan book questions. In your BRBL paper, the Macmillan book questions are of good quality, and I've also provided you the explanations along with it. The correct answers and explanations have been discussed. So make sure that you watch the video till the end. All the questions are important. These questions that are MCQ questions, true and false, fill in the blank questions are asked in your BRBL exam. So watch the video till the end. And to study the BRBL paper in detail, you can join the CAIIB Super Elite Plan, in which you'll be getting the foundation batches, the crash and cracker batches, and very soon we'll be starting with the capsule batches as well. So everything you are going to get in the all-in-one plan. So I wish you all the best for your exam. Let us prepare together and clear the CAIIB exam. Thank you and all the best. So the first question from our unit 1. State which of the following statements are true. A public sector bank is a body corporate created under a special statute. A banking company is registered under the Banking Regulation Act. Cooperative banks are registered under the Multi-State Cooperative Societies Act or a State Cooperative Societies Act. So this question is from your Unit 1. This question asks you to state the true statement. So is the public sector bank a body corporate? Is it created under a special statute? This statement is true, right? A banking company is registered under the Banking Regulation Act. This statement is incorrect. A banking company, the definition of banking is given under the Banking Regulation Act, the Section 5B. Banking means the accepting for the purpose of lending or investing of deposits of money from the public, which can be repayable on demand or otherwise. But the registration is as per the RBI Act, the license for banking. Every banking company, as per the section 22 of the Banking Regulation Act, they need to get registration from RBI. They need to submit their application and RBI gives them the approval. All right. Third statement says cooperative banks are registered under the Multi-State Cooperative Societies Act or the State Cooperative Societies Act. This is correct. The public sector banks are constituted under the Banking Companies and Transfer of Undertakings Act of 1970 and 1980. All right. When we talk about the cooperative banks, it conducts the ordinary banking business, but it is established on a cooperative basis, right? When the Cooperative Societies Act of 1904 was enacted, then basically the cooperative banks they came into force. All right. So if it is operating in more than one states, then the Central Act, that is the Multi-State Cooperative Societies Act applies. In other cases, if it is operating in only one state, then the respective State Cooperative Societies Act would apply. So statement C is also correct. The correct answer will be option 2, A and C. All right. So the institute is going to ask you multiple selection questions. So prepare accordingly. Be ready to face these types of questions, the multiple selection questions. Second question. Under which act Reserve Bank was constituted? Very simple, direct question. Banking Regulation Act, Companies Act, none of the above or the RBI Act. So this is a very simple question. The Reserve Bank of India Act of 1934, it was enacted to constitute the Reserve Bank of India. It was legislated with the primary aim to regulate the issue of banknotes, keep reserves with a view to secure the monetary stability in India, to operate the currency and the credit system of the country. So it is incorporated, it is constituted under the RBI Act of 1934. Which of the following statements is or are false? Now you need to select the incorrect statements. Which of these following statements are incorrect? The central government can give directions to RBI. All kinds of business by banks are regulated only by RBI. Central government is the primary regulator of banks. State governments have no control over the cooperative banks. You need to select the incorrect statements. The incorrect statement. So out of these, only statement one is correct, rest all are incorrect. All right. When we talk about the Reserve Bank as a central bank and regulator of even the non-banking financial institutions, apart from RBI, even government acts as a regulator of the bank. Central government has been conferred extensive powers under the RBI Act or the Banking Regulation Act to regulate the banks directly or indirectly. Like the governor and the members of the Central Board of RBI are also appointed by the Government of India. The Government of India has the powers to remove them. The Government of India is the sole shareholder of RBI. The government can give directions to RBI whenever considered important in public interest in consultation with the governor of RBI. These powers are to be rarely used, only once. Only once the government of India in October 2018 had utilized these powers. They sent separate letters to RBI. All right. So the government can do certain acts to regulate or supervise the banks, like appeal against the removal of a managerial personnel of bank exercised by RBI, appeal against the cancellation of banking license, refusal of certificate regarding floating charge on assets, suspension on operations. All right, so the correct answer, or in fact, the false statements are B, C, and D only. Option 3. Statement A is correct. All right, statement A is correct. Cooperative banks operating in different states are registered under the State Cooperative Societies Act, Multi-State Cooperative Societies Act, RBI Act or the Banking Regulation Act. This we have already discussed. If it is operating in only one state, then the State Cooperative Societies Act applies. But if it is operating in more than one state, then the Central or the Multi-State Cooperative Societies Act is going to apply. So the correct answer is B. Next, banking companies are not permitted to give dividend until all dash are written off. Now we are starting with the unit 2, control over organization of banks. So if the bank wants to declare dividends, the banking companies are eligible to declare dividends, but they need to follow certain prudential requirements. So, as per those prudential requirements, the banking companies are not permitted to give dividend until all dash are written off. Bad debts, expenses, amortization of dividends or capitalized expenses. So, what will be the correct answer? They can declare dividend when all the capitalized expenses are written off. All right. The proposed dividend should be payable out of the current year's net profit. The bank should have CRAR of at least 9% for the preceding two completed years. And for the year in which they are declaring the dividend, net NPA should be less than 7%. Right? And this third requirement is also there when all the capitalized expenses are written off. Which of the following statements are true? Another multiple selection question. You need to select the correct statements. A temporary branch for less than 30 days in a town where a bank has an existing branch does not require permission from RBI. A company whose banking license is rejected can undertake business as a money lender or undertake other business. A decision of the Reserve Bank to revoke license is final and no appeal lies from it. Banking companies are permitted to give brokerage up to 2.5% of the paid up capital of the shares. So, which of these statements are correct? When we talk about the licensing, so license requirement from RBI is there. It is at the discretion of RBI to grant the license subject to the conditions that RBI may think fit, like the company is in the position to pay its present or future depositors. The affairs of the company are not being conducted in a manner detrimental to the public, right? Similarly, if a bank wants to set up a new branch, they need to seek approval from RBI. No banking company shall open a new place of business in India or change their earlier existing place of business situated in India. However, this does not apply for a period not exceeding 1 month. So, a temporary place of business within the same city, town, or village where the banking company already has a place of business. This does not require approval from RBI. So, this statement is true, right? A company whose banking license is rejected can undertake business, correct? There's ABC Bank. This company has a bank. This company has also has other businesses. If the banking license is rejected, can the other businesses continue? Yes, they can. Is the decision of RBI to cancel the license final? No. Like we have already studied, an appeal can be made to the central government. When RBI cancels the license or rejects the license, appeal can be made to the central government. So this statement is incorrect. The banking companies are permitted to give brokerage up to 2.5% of their paid up value of the shares. This statement is also correct. So the correct answer should be A, B, and D. Option 3 is correct. Option 3 is correct. All right. A director of a banking company should not have dash in any other company. Now, when we talk about the appointment of directors to a banking company, they have some qualifications that they need to fulfill, right? So, beneficial interest, any interest, substantial interest, or majority interest. The correct answer will be option A, that is substantial interest, correct. The definition of substantial interest. The definition of substantial interest has been changed. So the Banking Laws Amendment Act of 2025 has significantly raised the substantial interest threshold for shareholding in banks. Earlier it was 5 lakh rupees, now it is 2 crore rupees. So this update aims to reduce the regulatory burdens on smaller investors. The update which had remained unchanged since 1968. So this has been increased. So a person or entity is now considered to have a substantial interest if they hold shares exceeding 2 crore or 10% of the paid up capital of the bank, whichever is lower. Earlier it was 5 lakh rupees. So the correct answer is A. Which of the following statements are false? Now you need to select the incorrect statements. The maximum period of office that may be held continuously by an ordinary director in a banking company is 8 years. The decisions of the board of directors during the period when the board's constitution is defective shall be void. The post of chairperson of a banking company may be on a part-time basis. The chairperson of a banking company can hold office only for a maximum period of 8 years. So, which of these statements are false? First statement is true. The maximum period is 8 years, but the second statement is incorrect. Even if the board's constitution is defective, the decisions which were taken during this period will not be considered void if those decisions were not material. So B statement is incorrect. Third statement, post of a chairperson may be on a part-time basis, but the fourth statement, again, the correct answer will be B and D. The correct answer, that is the false statements, are B and D. A and C are correct. All right. So the qualifications, appointment, removal of the directors is very important. There are restrictions on employment. Qualification shares are there. Temporary vacancies, how they are fulfilled. Qualifications of the whole-time chairperson or the managing director. Removal of the whole-time chairperson or the managing director. Reconstitution of the board. This is a very important topic, and every time questions are asked by the institute. That is all from our unit 2. Now let us start with the questions from our unit 3, that is the regulation of banking business. First question. Reserve Bank may issue directions to banking companies under Section 21 on the Banking Regulation Act on. So what is the Section 21 of the Banking Regulation Act? Audit, loans and advances, capital structure, or none of the above. So RBI has the power to issue directions. The directions issued by RBI, the most important ones are Section 21 and Section 35A. They are statutory binding on the banks. Section 21 gives powers to regulate the advances by banking companies, the loans and advances. There's another important section, Section 35A, which gives powers generally to regulate the banking business. So, Section 21, regulating the rate of interest, the terms and conditions of acceptance of deposit, makings of loans and advances. All right, so the correct answer will be B. Which of the following statements is or are true? You need to select the correct statements. Reserve Bank can issue directions on loans and advances under Section 21 of the Banking Regulation Act. This statement we just discussed is true. Regulation of credit to the different sectors is known as selective credit control. What is the RBI's policies? RBI's policy to regulate the monetary policy or the money supply. So RBI has some qualitative measures and some quantitative measures. Selective credit controls comes under qualitative. RBI tries to control the quality of credit. So RBI will increase the priority sector lending. RBI will issue directions to the banking companies to increase the number of loans to these priority sectors. This statement is true. Banks are free to lend any amount to their directors. Incorrect statement. There are restrictions on loans and advances. When the banks are giving loans to the directors, there is restriction. Like this prohibition on loans and advances to firms in which the director is interested as a partner, manager, employee, or guarantor. Any company in which the director is holding substantial interest. All right, so the statement C will be incorrect. D, banks have to file a return to RBI under the section 26. So the correct answer will be A, B, and D. All right, A, B, and D. The minimum amount out of the net profit which is transferable to the reserve fund each year after adjustment or provision towards the bonus to staff. So this is a factual question. It is a direct question. These types of questions are also asked. All right. So what is the minimum amount out of the net profit which can be transferred to the reserve fund each year? The correct answer is A, 25%. Again, which of the following statements are true? Only scheduled banks have a duty to maintain cash reserve under Section 42 of the RBI Act. Is this statement true or false? You need to select the true statement. This statement is true. Every banking company has to maintain liquid assets under the Section 24 of only scheduled banks. No, this statement is incorrect. Even the non-scheduled banks are required to maintain cash reserve ratio. So this statement will be incorrect. Every banking company has to maintain liquid assets as required under the Section 24 of the Banking Regulation Act. Is this statement true or false? So this statement will be true. You need to select the false statement. Okay, this statement is false. Statement B is true. The share capital and reserves of a banking company form part of its demand and time liability. Is this statement true or false? This statement will be false. All right. And the cash reserve under the section 42(1) will be minimum of 3% of the demand and time liabilities. Banks are required to maintain cash reserves. Like scheduled banks, they are required to, like scheduled banks are the banks included in the second schedule of RBI Act, right? They need to maintain the cash reserves according to section 42. Other than that, they are not required to maintain under section 42. Rather, there's a different section for it. Maintenance of cash reserve. All right. And so this statement, the incorrect statement will be C and D. The incorrect statement are C and D. So A and B are correct. C and D are incorrect. The correct answer will be option 3. All right. Yes, the correct answer will be option 3. Okay. Reserve Bank is empowered to conduct dash of a banking company under Section 35, 1 of the Banking Regulation Act. So what is the Section 35, 1? Now we have started with the next unit. The unit 3 is complete. Now we have started with the unit 4, which is the returns, inspection, winding up mergers and acquisition. So what is conducted under Section 35, 1? Inspection, special audit, audit or none of the above. What will be the correct answer? What will be the correct answer? The correct answer will be option A, that is inspection. The RBI has powers to conduct inspection of the banking companies. All right. The banking companies, they need to prepare accounts, annual accounts and balance sheet, profit and loss account. They also, the clause 41 of the SEBI listing agreement is there. Publication of the accounts and balance sheet is there. Also, every banking company has to submit 3 copies of their balance sheet. So these are the various requirements. Section 35 1 particularly deals with inspection. RBI can conduct inspection. All right. Nowadays, the annual financial inspection consists mainly in assessing all types of risks. It is a risk-based supervision through the SPARK, the Supervisory Program on Assessment of Risk and Capital, and then issue of the risk assessment report. RBI may also conduct other inspection at any time. So the correct answer will be A. Which of the following statements is or are true? You need to select the true statement. Foreign banks have to prepare accounts and balance sheet in respect of the business transacted in India. Statement is true. When we talk about the foreign banks, they need to maintain or they need to create their accounts only for the business that they have conducted in India. RBI requires permission of central government for ordering a special audit. Is this statement true? No, this statement will be incorrect. 3 copies of the balance sheet, profit and loss account, auditor's report will be submitted to RBI. I have already told you it is correct. A copy of the scrutiny report has to be given to the banking company, whether requested by it or not. This is incorrect. The correct answer will be option 2, A and B. All right. So when scrutiny is conducted, at any time, RBI may cause a scrutiny to be made. A copy of the report of scrutiny, if the banking company requires, then it will be furnished. So, unlike in case of inspection, it is not mandatory for RBI to provide a copy of the scrutiny report to the banking company. Not necessary. So, the correct answer will be option 2, A and C. Dash may apply to High Court for winding up of a banking company. Who can apply to the High Court for the winding up of a banking company? ROC, Reserve Bank, Central Government, or the Finance Ministry. So there can be acquisition of undertakings. There can be amalgamation of banks. And there can be winding up. All right. So who can apply to the High Court? The Reserve Bank can apply. All right. So a banking company which is unable to meet its obligation, RBI can apply it to the High Court. So the High Court will order the winding up of the banking company. If the banking company is unable to pay its debts or the application is made by RBI. Okay. So under the section 38, then when the direction is completed, the central government may issue such direction for inspection or scrutiny on the basis of inspection or scrutiny conducted by RBI. Which of the following statements are true? Central government can acquire the undertaking of a banking company under the section 36A(e) of the Banking Regulation Act in the interest of banking policy without any report from the RBI on the affairs of the banking company. Is this statement true or false? This statement will not be true. When RBI submits a report, on the basis of the report, the central government can acquire the undertaking. The undertaking of an acquired bank may vest in the central government, correct. The central government can hold the banking company and they can keep the undertaking with themselves or give it to any other company. On the application of RBI, the High Court may stay the commencement or continuance of proceedings against any banking company. Is this statement true or false? No, the statement will be incorrect. The Reserve Bank or State Bank, as specified by RBI, can be appointed as a liquidator of the banking company. So, when we are talking about the acquisition or winding up, see, acquisition means the central government can acquire the undertakings of the banking company if they have failed to comply with the directions or the banking company is being managed in a manner detrimental to the interests of the depositors. So it will be acquired. Amalgamation means a banking company may be amalgamated with another banking company, right? For this, a scheme has to be prepared containing the terms of the amalgamation. It should be approved by the majority of the members, two-thirds in value. Then there can be moratorium and amalgamation. There's also the option of winding up because the banking company needs to pay off its debts. If they are unable, then the banking company can be wound up. It is synonymous to being shut down when it ceases to do business. All right, so the correct answer will be option 3. B and D are only correct. The minimum period for the preservation of records under the PMLA 2002 for certain suspicious transaction. So you have studied the PMLA in detail in your module B, but a very small introduction is also given in your module A. So for suspicious transaction, what is the time period for which the records have to be maintained? The correct answer will be D, 10 years. All right. So all cash transaction of value more than 10 lakh rupees, series of cash transaction below 10 lakh but equivalent to 10 lakh rupees, all transactions of the non-profit organization of more than 10 lakh, wherever there are suspicious transaction. So the correct answer will be D. All right. The correct answer will be D. Okay. Next question. The State Bank of India is a dash constituted under the State Bank of India Act. Now, the Unit 5, it deals with the public sector banks, the private sector banks, regional rural banks, differentiated banks, cooperative banks, and the local area banks. So, the State Bank of India was established under the Section 3 of the SBI Act of 1955 for taking over the undertaking of the Imperial Bank. So it is a body corporate. It is a body corporate. It has perpetual succession, common seal. It can sue and be sued in its own name. And the majority of shares, in fact, no shareholder other than the government of India can exercise a voting right above 10%. Now the complete holding has been acquired by central government. Which of the following is or are false? You need to select the false statement. The SBI can make statutory regulations for carrying out the purposes of SBI in consultation with RBI and with the previous approval of central government. The central government is not authorized to give any directions to SBI. The provisions of Section 42 of the RBI Act relating to the cash reserve apply to the state bank. The state bank has to transmit to the central government or RBI within 3 months from the date of annual closing particulars of its shareholders. Now, the even state bank has to close its books and balance account each year on 31st March. Within 3 months of the closing date, it has to furnish to the central government and RBI its balance sheet, profit and loss account, together with the auditor's report and a report by the central board on the working and activities. The audit may be conducted by a person duly qualified to be the auditors of company. All right, also a report on the particulars of shareholders on that particular date, right? So the correct answer, or we will say the false statements, are 2 and 4. The false statements are true and false. Okay, the correct answer is D. Cooperative banks have to prepare their balance sheet, profit and loss account in the forms set out in the third schedule. So, cooperative banks also need to prepare their balance sheet, profit and loss account. It is according to which act? The Banking Regulation Act, the Reserve Bank of India Act, the State Cooperative Societies Act, or the Central Cooperative Societies Act. What will be the correct answer for the cooperative banks? The correct answer will be option A, Banking Regulation Act. So the cooperative banks have to prepare their balance sheet, profit and loss account according to the Banking Regulation Act. A cooperative bank means a primary cooperative, a central cooperative, state cooperative, or all of the above. So it is a very simple question, option D. It can be a primary cooperative bank. State means under the State Societies Act, or the central means under the Multi-State Cooperative Societies Act. All right. So that will be the correct answer, option D. Cooperative banks, the Banking Regulation Act is applicable to them, subject to the modifications of the Act. Right? It was made applicable when in 1965, when the name of the Act was changed. The primary object, the paid up capital, the bylaws, everything is defined under the Act. All right. Next, the area of operation of a local area bank is usually restricted to a maximum of dash geographically contiguous districts. So, what is the area of operation of a local area bank? 4 districts, 2 districts, 6 districts, or none of the above? What will be the correct answer for the local area bank? The local area bank, correct answer will be option D, none of the above. Why? Because the local area bank's area of operation is restricted to a maximum of three geographical contiguous districts. It they're focused on local customers, predominantly in the rural and the semi-urban areas to bridge the gap, credit gap in these areas. So the correct answer will be D. The number is 3. Next, we have the unit 6, which is the NBFCs. First question from unit 6. The scale-based regulatory framework for NBFC to be introduced by RBI. What is the date from which the scale-based framework has been introduced? 31st of March 2022, 1st October 2023, 1st October 2022, or none of the above? It is a very simple question. 2022 October. What is the scale-based regulatory framework? The NBFCs have been divided into four layers based on their size, activity, perceived riskiness. It is the base layer, middle layer, upper layer, and top layer. So the correct answer is C. Registration of NBFCs is mandatory under which statute? The Banking Regulation Act, the RBI Act, the Companies Act, or the Banking Companies Acquisition and Transfer of Undertakings Act. So, under which statute the NBFCs are established? They're established as per the RBI Act. So, who are NBFCs? When we talk about the non-banking financial company, it is registered under the Companies Act, engaged in the business of loans and advances, acquisition of shares, stocks, bonds, debentures, issued by the government or local authority. The Department of the Non-Banking Supervision of RBI has been given the responsibility for their regulation and supervision. With effect from 1st October 2022, the stand-alone primary dealers will be treated as a part of which classification? So, according to the scale-based regulation, in which layer do the standalone primary dealers fall? The base layer, upper layer, middle layer, top layer, or all of the above. So the scale-based regulatory framework is very important. In the base layer, we have the non-deposit taking NBFCs that have an asset size of less than 1000 crore, peer-to-peer lending platform, account aggregator, non-operating financial holding company, or those that do not avail public funds, they do not have a customer interface. The stand-alone primary dealers, they come in the middle layer. All right. In the middle layer, we have all deposit taking NBFCs irrespective of their size. The non-deposit taking NBFCs that have an asset size of more than 1000 crore. Then the standalone primary dealers, the infrastructure debt funds, the CICs, HFCs, and the IFC, the infrastructure finance companies. Upper layer has those NBFCs which have a higher risk. So those requiring enhanced regulatory requirement will be placed in the upper layer. The top 10 eligible NBFCs in terms of their asset size will be in the upper layer. And the top layer remains empty only if there's a substantial increase in the potential systematic risk. Then those NBFCs will be moved from the top layer to the upper layer. Last question from this unit. Which is the minimum regulatory net owned fund prescription for infrastructure debt fund NBFC? Is it 20, 500, 600, or 300 crores? The correct answer is D. It is 300 crores for infrastructure debt fund NBFCs. All right. Now we are starting with the last unit of our module A, unit 7, which is the financial sector legislative reforms and the FSDC. After liberalization and globalization initiated in 1991, reforms have been introduced in. So in 1991, when the LPG reforms were initiated, there have been reforms in which sector? monetary policy, banking sector, forex market, capital market. So what will be the correct answer? The correct answer will be A, B, and C. Capital market reforms, they came after the 1998. All right. So the financial sector reforms. 1991 was Narasimham Committee. It was the first systematic attempt of the government for reforming the financial system, like the various recommendation, lowering the SLR, CRR, the directed credit program, interest subsidy. Then the basic reforms were under the banking sector reforms. They were basically technology related, supervisory measures, prudential measures, enhancing the market force. In financial market, money market reforms were there, forex market reforms were there, but capital market were not there. So the correct answer will be option 3, A, B, and C. The objectives of the FSDC, the Financial Sector and Development Council. What is the objective? To strengthen financial stability, promote the financial sector development, to promote competition or maintain financial stability. The FSDC was constituted in December 2010. So various regulators, the SEBI for capital market, IRDA for insurance, PIFRDA for pension fund, RBI for commercial banks and NBFCs, they come together for maintaining financial stability, promoting financial sector development, and enhancing the internal regulatory coordination. So the correct answer will be A, B, and D. All right. Enhancing competition is not the objective of FSDC. The FSDC, there are 8 wings of the FSDC: subcommittee, interregulatory technical group, the technical group on financial inclusion, financial literacy, etc. Who is the chairperson? Which one of the following is a promoter of FSDC? Government of India, RBI, SEBI, or IRDAI? Which of the following is the promoter of the FSDC? The correct answer will be option A, that is the Government of India. It was established by the Government of India. So the Government of India is the promoter. All right. Next. Which of the following is a function of FSDC? Enhancing the interregulatory coordination, focusing on financial literacy and financial inclusion, monitoring the macro prudential supervision of the economy, or option D, all of the above. So option D, all of the above is true. The functions you need to remember from the different subcommittees that are there, the wings of FSDC. All right, like the interregulatory technical group for coordinating among the financial sector regulators, the technical group on financial inclusion, interregulatory forum for monitoring the financial conglomerates, working group on resolution or regime for financial institution, macro financial monitoring group, the early warning group, crisis prevention and monitoring framework. Last question from this unit, this module, and today's session. What is the full form of the name given to the reform program EASE? So, what is the full form of EASE? Enhanced excellence in activities that serve enterprises, enhanced access and service excellence, enhancement in the ability to service entrepreneurs, or none of the above. The correct answer is B. Full form of EASE is enhanced access and service excellence. So there have been various versions of EASE. All right. So ease is there basically for making it easier for the various institutions. It is a comprehensive tech-enabled reform agenda for the Indian public sector bank, right? Ease 1.0 was there to make reforms in digital lending, improved customer service, robust government. Ease 2.0 basically it is to foster clean, smart banking. It is to enhance the role. 3.0, 2020-21, Next gen banking, the goal of 3.0 was next gen banking. Then 4.0, 21-22, tech enabled, smart banking, digital transformation. So there have been various versions of ease. All right. The ease 5.0 is the fifth edition. Again, for digital, data driven, inclusive banking. So the correct answer will be option B. So here you need to state true or false. The Prevention of Money Laundering Act of 2002 does not apply to banking transactions. Is this statement true or false? So when we talk about the Prevention of Money Laundering Act, there's a separate chapter in it, a separate chapter, which is the chapter 4. It deals with the obligations of the banking companies, financial institutions, and intermediaries. So these rules have been framed regarding the preparation of records, reporting them, maintenance of record. That is the responsibility of the banking institution. So this statement will be false. The term money laundering has been defined in the Prevention of Money Laundering Act 2002. True or false? Is the term money laundering defined? No, there is no definition of money laundering. However, in the rules, the term money laundering, the offense of money laundering is there. Whoever directly or indirectly attempts to indulge is a part of the crime, proceeds of crime like concealment, possessing, acquisition, use, projecting of that property as untainted property will be guilty of the offense of money laundering. This has been defined. The offense of money laundering has been defined, but separate definition has not been given. Director under the act is appointed by the RBI. The director under the act, PMLA. Is the director appointed by RBI or not? True or false? So, what will be the correct answer? This statement is also false. Why? Because the director is appointed as per the agents, the authorized persons who are Indian agents under the money transfer service schemes. They nominate a director on their boards as a designated director to ensure compliance and obligations with the PMLA. So this statement is also false. Record of transactions specified under the Act is to be maintained for 5 years. True or false? So when the banks they maintain record for the transactions, information relating to the transaction, the individuals who are conducting the transaction, the evidence, it has to be maintained for 5 years. True. RBI and SEBI can prescribe the nature of records. This statement will also be true. Whether the records have to be maintained in hard copy or soft copy, what information should be included in the record. This rule is framed by RBI and SEBI. Documents to be verified depend upon the type of client. This comes under the due diligence process. Due diligence, enhanced due diligence, verifying the identity of the client, undertaking the specific transaction. For different types of clients, different records or different proof of identity is there. For individual, certified copy of the OVD. For a company, certificate of incorporation, memorandum and articles of association. Partnership, registration certificate, OVD of the person acting in the transaction, and so on. So this statement will be true. Bank is not required to inquire the financial status of the client. False. Whenever there's a transaction, banks they will verify what is the source of the fund, the nature of the business of the client, and the financial status. The rules mandate that every banking company at the time of opening the account or executing any transaction with it verify and maintain the record of identity, the current address, including the permanent address and the financial status. So this statement is false. All cash transactions of value more than 10 lakh or its equivalent currency are covered under the Act. true. Which transactions have to be recorded? All cash transaction of value more than 10 lakh rupees, all series of cash transaction integrally connected to each other, value exceeding 10 lakh rupees even when the single transaction is less than 10 lakh, non-profit organization value more than 10 lakh, wherever a forged or counterfeit currency note or banknote has been found, all suspicious transactions have to be recorded. So this statement is true. As per the Rule 8, the principal officer is required to furnish the information in respect of transactions referred to clause A, B, B, A, C, and E every month, 25th of the month. Now, to answer this question, first you need to understand these clauses, the records that have to be maintained. So, clause A, cash transaction. Clause B, series of cash transaction. BA, receipt of non-profit organization. C, all cash transaction wherein forged or counterfeit currency notes are found. And E is cross-border wire transaction, value more than 5 lakh rupees. And the procedure for furnishing this is by the 15th of every month, not 25th. So the statement will be false. As per the rules framed under the Rule 4, the record to be maintained should also contain the date on which the individual transaction was conducted. True. What information? The nature of the transaction, amount of the transaction, and the currency in which it was denominated, the date on which the transaction was conducted, and the parties to the transaction. This information has to be included. So the correct answers are here. Next. Next, we have the Unit 9, which is the Negotiable Instruments Act. Which one of the following is not the holder of a check? A check made out to the order of X, couriered but not received. A bearer check found lying on the road by Y. A duplicate check issued to Z who had misplaced it. Or none of the above. So in the negotiable instruments, check, a holder should be a holder in due course. All right. It means that the instrument has been obtained from its lawful owner. They are in the lawful custody, not by any offense or fraud. So here the correct answer will be B. If you find a check lying on the ground, this will not make you a holder in due course. So the correct answer will be B. Which is not one of the criteria to be fulfilled for a person to be a holder in due course. Check should be crossed. It should have been acquired for consideration. It should have been acquired before its maturity or all of the above. So for a holder to be a holder in due course, what are the requirements? The requirement is that it should be acquired for consideration, lawful consideration. It should be acquired before maturity, but it is not necessary that the check is crossed. This is not a condition for a holder in due course. All right. There should be no reason to believe that a defect exists. The instrument should be complete and regular when the holder takes its possession, and also the defendant would not be entitled to an amount of an incoherent stamped check. All of these points are there. Which of the following circumstances indicate a material alteration? Material alteration means any change in the negotiable instruments which causes the instrument to speak something completely different. An alteration means that substantially alters the instrument and the liabilities of the parties to it, irrespective of whether the alteration is beneficial or prejudicial to the pay. If it alters the business effect, so the alteration in the date of the instrument, which could hasten or delay the time of payment, alteration in the name of the pay, alteration of the amount, which is the most common form, and alteration of an order check to a bearer check. So the correct answer will be D, all of the above. Which one of the following is not an example of material alteration? necessitating for refusal of payment of a check. Which of the following is not an example of material alteration? When a bearer check is made into an order check, when the date is overwritten, when the crossing is obliterated, all of the above. So when an order check is made to a bearer check, then it is a material alteration, but a bearer check made to a order check is not a material alteration. So the correct answer will be A. When a bank is paying a check presented for payment for debit from the saving bank account of the customer, what is the relationship between banker and the customer? What is the relationship between the banker and the customer when the check is presented and the savings account is debited to make the payment? Principal and agent, lessee and lessor, debtor and creditor, or none of the above? So the banker and the customer will have a debtor creditor relationship. The bank is going to debit the account credited to the customer. So the correct answer is C. Now let us start with the questions from our FEMA, Unit 10, Foreign Exchange Management Act. True and false questions are there. Authorized person is an individual authorized by RBI to deal in foreign exchange. Is this true or not? This statement will be true. It could be an authorized money changer or dealer, offshore banking unit, or any other person authorized under the FEMA to deal in the foreign exchange management. So the statement will be true. A current account transaction alters the asset or liability outside India of persons resident in India. The transactions can be of two types: current account and capital account. Current account means where any asset or liability does not change. Payment due with respect to foreign trade done, payments due as interest on loan, remittances for parents, children living abroad. Capital account transaction means a transaction by which there may be a change, either an increase or a decrease in the assets or liabilities outside India. So this statement is talking about a capital account transaction. It is false. A capital account transaction includes payment due in consideration with foreign trade in the ordinary course of business. This statement will be false. Why? Because here we are talking about the current transaction. Asset or liabilities of the persons involved are not changed. Foreign exchange includes traveler's check. Is this statement true? Yes. Foreign exchange. What does foreign exchange include? It will include amounts payable in foreign currency, drafts, traveler's check, letter of credit, bills of exchange, expressed or drawn in Indian currency but payable in foreign currency, or drawn in foreign currency but payable in Indian currency. So the statement will be true. RBI can revoke any authorization given to an authorized person. So the regulation and management of foreign exchange, basically the rules and regulations are made with special permission or general permission of the RBI. Without RBI's permission, no person can deal or transfer any foreign exchange. RBI has the powers to appoint authorized person, to inspect the authorized person, and to remove the authorized person in case of contravention. So the correct answer, it is true. Civil court has the jurisdiction to entertain any suit or proceeding in respect to any matter under the FEMA. Is this statement true or false? This statement is false. Why? Because there's the Directorate of Enforcement. The Directorate of Enforcement, which is the Directorate is empowered with the director and other officers established by the central government. The director has the powers of search, seizure. They can also empower other officers. So any contravention, if any person contravenes the provisions of the act, RBI will impose penalty. RBI will look at the cases, not the civil courts. All right, so the correct answer, this is false. Any person aggrieved by the order passed by competent authority may prefer an appeal to the High Court. The statement is also false. Wherever the competent authority will dispose of the petition within a period of 180 days, the order of the competent authority confirming the seizure, whatever is there. If any person is aggrieved, they can prefer an appeal to the appellate tribunal, not to the High Court, to the appellate tribunal. So the statement will also be false. All right. That is all. These are the questions from the unit 10, that is FEMA. Next, we have the Payment and Settlement Systems Act. A financial instrument whose value is derived from the change in interest rate, foreign exchange rate, credit rating, or credit index, price of securities, etc., also called underlying, or any other underlying or a combination of more than one are called. So, which financial instrument are we talking about? It derives its value from some underlying. So, this is known as a derivative. Derivative means an instrument that can be settled at a future date, whose value is derived from a change in interest rate or foreign exchange rate, anything which is known as the underlying. All right. The combination could include interest rate swaps, forward rate agreements, foreign currency swaps, foreign currency options, as prescribed by RBI from time to time. Under the Payment and Settlement Systems Act of 2007, which entity is authorized to approve commencement or operation of a payment system? Which authority? The designated authority is RBI. Reserve Bank of India is the designated authority for the supervision, RBI for the regulation, supervision for the functions of the act. RBI has the power to give authorization. RBI also has the power to refuse authorization or revoke authorization. For RBI to consider authorizing a company or corporation to operate or regulate the existing clearing houses or the new clearing houses of banks in order to have a common retail clearing house throughout the country. What percentage of the equity of such company should be held by a public sector bank? So, who all are eligible to start a payment system? RBI can also allow an existing clearing house or new clearing houses. But for that, they need to have not less than 51% of the equity to be held by a public sector bank. Not less than 51% of the equity should be held by a public sector bank. Then they can apply for authorization. Then RBI will consider their authorization for the payment system. All right. Prior approval is required from RBI before a system provider causes any change to take place in the system, which would affect the structure or the operation of the payment system. How many days notice should be given to the system participant? So, wherein the any system participant, they want any payment system, they want to make a change. First, they need to apply to RBI for authorization. And when RBI gives the authorization, then they have to give a notice so that the system participants they can adjust to the changes. All right. No change can be made without the prior approval of RBI and without giving notice of not less than 30 days to the system participants. If let's say there is a very immediate change due to some regulations, then less than 30 days can be given. If RBI thinks that this change requires more time, then more than 30 days can also be given. So the correct answer is D. Next, we are starting with the unit 12, law related to securities and modes of charge. Mortgage is dash in the movable property, transfer of title, transfer of interest, pledge or hypothecation. What is the definition of mortgage? Mortgage is a charge created wherein the interest in a specific immovable property is transferred. The borrower who takes a loan, they keep the immovable property as security for the purpose of securing the payment of money advanced or to be advanced by way of loan. So this is known as a mortgage, a transfer of interest. And once the borrower pays, it has to be, the property will be reconveyed. Simple mortgage is created by an instrument in writing, a oral agreement, a oral assent or unwritten promise. What is a simple mortgage? Simple mortgage means that without delivering possession of the mortgaged property, the mortgager binds himself personally to pay the mortgage money. They agree that if he fails, then the mortgagee will have the right to cause the mortgage property to be sold by a decree of the court. Right? So the correct answer, it is an instrument in writing. It is created by an instrument in writing. In a mortgage by way of conditional sale, the property is sold unconditionally, sold by the mutual oral consent, sold with a condition for reconveyance. All of the above are correct. So, what happens in a conditional sale? The property is sold ostensibly. Ostensibly means conditionally. If the borrower pays the money, then the property will, the contract, the agreement, the sale will be refuted now. The sale will become void. And if the borrower fails to pay, then the sale will become absolute. So the sale is with a condition for reconveyance. All right. The sale is ostensible, it is not real. If the money is not repaid on the agreed date, then the ostensible sale will become absolute. First, the mortgagee will have to apply to the court and obtain a decree. Limitation period for filing a suit for the sale of mortgaged property is dash years when the money sued for becomes due. So when the money sued for becomes due, within how many years the suit has to be filed? What is the limitation period? 3 years, 5 years, 10 years or 12 years? The correct answer is 12. Beyond this, it will become time barred and now the creditor won't be able to exercise their powers. Pledge means dash of the goods for the purpose of securing a payment of debt or performance of the promise. What is the meaning of pledge? Pledge means that the goods are transferred, right, for a purpose, and the purpose is to secure the payment of debt or performance of a promise. So pledge is a bailment of movable goods. There must be a bailment. The bailment should be by or on behalf of the debtor, and the purpose of bailment should be to provide security for the purpose of debt or performance of a promise. This is a pledge. What is bailment? Bailment when movable goods are transferred to the bailee for a specific purpose. And what is pledge? When the purpose is for securing the money. Hypothecation is an implied pledge in case where constructive possession of goods is given, delivery of goods is given, constructive possession of obligation is given, or none of the above. So, what is hypothecation? When a charge is created upon movable property, it can be existing or it can be future. When the movable property is future, hypothecation is the only option, and it becomes an implied pledge when the constructive possession is given. The possession can be actual or it can be constructive. Without delivering either the property or possession to the creditor, the hypothecation is done. So it is an implied pledge that if the borrower defaults, then it will give the full right to the mortgagee. The term hypothecation has been defined in which of the following acts? The Indian Contract Act of 1872, the Negotiable Instruments Act of 1881, Transfer of Property Act of 1882, or the Surface Act. So this is a confusing question. We might think that the hypothecation would be defined under the Transfer of Property Act like the other types of charges, but no, the correct answer is D. Hypothecation is defined under the Surface Act, Section 2 of the Act. All right, now let us move on to the last chapter. Charges created by a company shall be registered with Registrar of Assurances, Registrar of Firms, Registrar of Companies, or option D, all of the above. Charges created will be registered under. What will be the correct answer? The correct answer will be C, the Registrar of Companies. What is a charge? Charge means that interest is created. Charge mean any form of security for debt, right? Charge means an interest or lien created on the property or assets of a company or any of its undertakings. This is basically created in the favor of the creditor or the lender for the amounts due to it by the company, which is required to be registered under the provisions of the Companies Act. It is mandatory for every company to register with the ROC the specific charges created by it. Charge shall be registered by a company within dash days from the date of creation of the charge. Within how many days the charge has to be registered? 60 days, 30 days, 15 days, or at the discretion of the bank. The charge has to be registered within 30 days. The charge has to be registered within 30 days. Otherwise, it will lead to a delay and penalty will be imposed. All right. Last question. Under the Section 82 of the Companies Act of 2013, a company shall give intimation to the registrar of the payment or satisfaction in full of any charge within a period of dash days from the date of payment or satisfaction. Within how many days the satisfaction charge has to be registered with the ROC? 120 days, 300 days, 30 days, or 45 days? So the correct answer here also is 30 days. See, the time for registering the charge, the procedure of the registration of charge within 30 days of creation, modification, satisfaction, the charge has to be registered, paying the normal fee. After 30 days, within 60 days, additional fee. Maximum is 120 days. And then there are different types of forms like charge 1 to CSG 1 to CSG 9 is there. CSG 1 for other than debentures, CSG 5 for the satisfaction, CSG 10 form is also there, application for delay. So these are the questions from your unit 14. So the first question is under the scheme, which scheme? The integrated ombudsman scheme. Appellate authority would be the, so under the RBI integrated ombudsman scheme, the appellate authority is the governor of RBI, finance minister, deputy governor of RBI, or the executive director of RBI. Try to answer this question. Who acts as the appellate authority under the integrated ombudsman scheme? So the correct answer is D, the executive director in charge of the department which is administrating this scheme. So the correct answer will be D. What is the maximum period for which an ombudsman or deputy ombudsman may be appointed under the scheme? So what is the period of appointment of an ombudsman or deputy ombudsman under the integrated ombudsman scheme? 1 year, 3 years, 4 years, or 10 years? The correct answer will be B, 3 years. The integrated ombudsman we appoint the ombudsman for a period of 3 years. So the banking ombudsman scheme, the ombudsman scheme for NBFCs, and the ombudsman scheme for digital transactions, they were merged into the integrated ombudsman scheme of 2021. So wherever a customer faces a deficiency in service, they can make a complaint to the integrated ombudsman by following the procedure. If they're not satisfied, they can also make an appeal to the appellate authority. The deputy ombudsman is a person appointed by the RBI and even the ombudsman. All right, so the correct answer, the appointment and tenure. The RBI may appoint one or more of its own officers as ombudsman to carry on the functions for not a period exceeding 3 years at a time. Now, these are the true false questions. All complaints may be sent under the scheme to the CRPC center only. Is the statement true or false? So, what is the procedure for redressal of complaint? The complaint can be made online or the complaint can be made to the CRPC if in the physical format. So this statement will be false. The ombudsman would send a copy of the complaint received from a customer of a regulated entity to the regulated entity. The statement will be true. So when the ombudsman receives the complaint, they will send notice along with the copy of the complaint to the regulated entity, the bank, NBFC, any other financial institution. And they will be required to furnish the documents as to why the relief prayed should not be granted. So the statement will be true. If a complaint made by a customer to a regulated entity is not replied, what is the minimum period after its receipt by the regulated entity? May the customer make the complaint to the ombudsman? So, the complaint first will be made to the regulated entity, and the regulated entity has to give a response within how many days? Within 30 days. If the regulated entity does not give a reply, or the customer is not satisfied, or they rejected the complaint without any apparent reason, then the complaint can be taken forward to the ombudsman. So the period is 1 month. The bank or the regulated entity has to reply to the customer within a period of 1 month. Next, we move on to the Micro, Small and Medium Enterprises Development Act. Which of the following statutes provides a current definition of MSMEs? The MSMED Act, the Delayed Payments Act, the Minimum Wages Act, or the Factories Act? So the correct answer is A. The Micro, Small and Medium Enterprises Development Act of 2006. It was enacted to facilitate the promotion and development and enhancing the competitiveness of the MSMEs. It represents the most comprehensive regulation over the MSMEs in India. All right, so the correct answer is A. MSMEs are governed by which of the following ministries? The Ministry of Financial Services, Ministry of Commerce and Industry, Ministry of Small Scale Industries, or the Ministry of Micro, Small and Medium Enterprises? Very basic question. The MSMEs are governed by the Ministry of Micro, Small and Medium Enterprises. All right. Next, what are the revised norms regarding the investment in plant and machinery in respect to the micro enterprises as per the MSMED Act? See now, as per the MSMED Act means you need to answer according to what is given in your book. But now in 2025, a new definition of MSME has been given regarding the investment and turnover. So if the institute asks you about the revised definition, you need to answer that. Here, according to the MSMED Act, the investment in plant and machinery does not exceed 25 lakh rupees. Investment does not increase 1 crore rupees. Investment in plant and machine exceeding rupees 2 crore. So according to the old definition, the correct answer will be B. Investment in plant and machinery not exceeding 1 crore rupees. If we talk about the new definition of MSME as per the 2025 amendment, the the investment limit has been increased approximately 2.5 times, and the turnover has increased almost twice. The turnover criteria has increased twice. So the investment for a micro enterprise is 2.5 crore and the turnover should not be more than 10 crore. For the small enterprise, the investment will be 25 crore, turnover 100 crores. And for the medium enterprises, investment up to 125 crores and turnover up to 500 crore. So from the old definition, both the investment and the turnover has been increased. Where an application is made to the court by a buyer for setting aside any decree or award made either by the facilitation council or by any institution or center providing alternate dispute resolution services, what percentage of the amount of the decree or award is to be deposited with the court by the buyer? What will be the correct answer? So if the buyer pleads not guilty, this is the case of the unpaid seller. The buyer says that the decree should be set aside, the award should be set aside. The court will hear the court's case, the court will hear the buyer only after the buyer makes a deposit of 75%. So the MSMED Act protects the unpaid seller as well. So the correct answer will be B. Next, we are moving on to the most important unit of our module C, which is the SARFAESI Act. Okay, so first we have the true false questions. Banks obtain security while lending, so that in case of need, the money can be of securities. Is the statement true or false? Actually, this requires the fill in the blanks, right? This is the fill in the blanks. Banks obtain securities while lending so that in case of need, the money can be dash of securities. Money can be realized by sale of securities. Realized by sale of securities. The SARFAESI Act is applicable to the housing finance companies whose names are notified by the central government. True or false? Is the SARFAESI Act applicable to the HFC? Yes, this is true. So the institute can also ask you direct questions without any options, true, false. They can ask you the fill in the blanks questions as well. All right. Whether movable securities in possession of the bank can be sold without the intervention of the court. Now, a court is required to sell the security. Yes, bank can sell as provided in the Contract Act. Yes, the SARFAESI Act has made provisions to that effect. No, until the account is not declared as NPA by the bank. So, can movable property, movable securities be sold without court intervention? Yes, it has been made applicable by the SARFAESI Act. So whenever the loan gets NPA and the bank has to recover their dues without approaching the court, without waiting for the court proceeding, they can initiate the powers under SARFAESI Act. As per the laws existing today, the mortgage security cannot be sold without a court intervention. Is this true? Option A, yes, court intervention is required as per the provisions of the Transfer of Properties Act. Option B, no, SARFAESI Act has now made enabling provisions. Option C, yes, since the Contract Act has made no provisions about any court intervention. Or D, no, due to recent amendments in the Transfer of Property Act, no court intervention is required. So we have studied about the SARFAESI Act. Accordingly, the correct answer will be B. SARFAESI Act allows the banks to sell the mortgage property without court intervention. So the correct answer will be B. Provisions of the SARFAESI Act 2002 applies to which securities? Any movable or immovable security charged to the bank or financial institution? To mortgage securities only? where the security interests are created for the repayment of financial assistance given by a bank or financial institution to the properties owned by the defaulter but those that are not a charge to the bank. So what will be the correct answer? The correct answer is that the bank has given a loan. It is a secured loan and the security interests are created in favor of the lender for the repayment of financial assistance. So the correct answer will be C. The correct answer is C. In the Mardia case, what did the Supreme Court declare as invalid? So when the SARFAESI Act was enacted, it was questioned. The constitutional validity was questioned in the Mardia Chemicals versus Union of India. But one section, which is the section 17, subsection 2. It said that when the borrower want to make an appeal to the DRT, they had to deposit 75% of the amount claimed by the lender. The Supreme Court declared that this condition of the deposit of 75% of the claim amount is unreasonable, oppressive, arbitrary, and violative of the Article 14 of the Constitution. So, this act then removed the Section 17, subsection 2. Condition to pay 75% of the amount as precondition while preferring an appeal to the DRT. All right. Next, we have some true and false questions. The SARFAESI Act is made applicable to pledged securities only. Is the statement true? So, in this case, the property could mean an immovable property, movable property, any debt or right to receive money, receivables, as well as intangible. And the SARFAESI Act is made applicable to the pledged securities? No, this will be incorrect. For the enforcement of the mortgage security, court intervention is required even for actions under the SARFAESI Act. This we have already covered. This statement is completely false. Banks and financial institutions can issue notice for enforcement over security under SARFAESI Act only if these securities are not in possession of the creditor and only when the account is classified as non-performing asset. So the bank, before taking possession, selling or attaching the property, they have to give a notice to the borrower that the borrower should pay within 60 days. If the borrower does not pay, then the remaining procedure will be immediately started. If the borrower does not pay within dash days after notice, within how many days? A 60 days notice is served. The secured creditor can take possession of the property of the security. Take possession of the security. All right. After receipt of notice from the secured creditor of the repayment of dues, the borrower is legally prevented. Correct. Now, once the borrower receives the notice that this property is now under the property of the bank, the borrower cannot sell the property, the borrower cannot transfer the property, dispose of the property. So, it will be legally prevented. On request of the secured creditor of the district magistrate or the chief judicial magistrate can take possession of the security for handing it over to the creditor. Is this statement true? So when the creditor has to take possession of the property, they can take help of the DM or the CJM. So this is true. When the management of the company is taken over, the directors are entitled, incorrect, they're not entitled for any compensation for the loss of job. So when there are two provisions that we are talking about here. First provision, to take possession of the property under securitization, what can the bank do? Bank can make an application to the DM or the chief judicial magistrate. They will look into it and pass the necessary order. Second provision, the directors of the company, when they have to leave their possession, because now the possession has been taken by the bank has taken over the management. The directors are not entitled for any compensation. When any bank or financial institution obtains a charge against property, With which authority will the transaction be registered to? So under the SARFAESI Act, it is important that all the charges are registered with the central registry. The correct answer is central registry. The central registry is established for recording all the charges created, modified, and satisfied. All right. When can the provisions of the SARFAESI Act 2002 be invoked for proceeding against the charged property? When the bank feels that it is necessary for recovery at any time, when RBI directs to do so, when there's default in repayment of the borrower, or when there is default in repayment and the bank declares the account as NPA. So the correct answer is D. The banks, the financial institution, can proceed against the charged property when there is a default in repayment and the account has been declared as NPA. It means it has remained unpaid for a period of more than three categories of special mention account. Whether existing or future receivables are property. Can existing or future receivables be treated as property under the SARFAESI Act? True or false? Yes, it can be treated as a property. From the following, which function is of a securitization company? What does the securitization company do? They take the pool of assets from the financial institution, they convert them into tradable securities which are traded. They are allowed for investing by the qualified institutional buyers. So the correct answer is acquisition of the financial asset from the originator. This now becomes a derivative. The originator, they pass on the assets from their balance sheet to the balance sheet of the ARC. This is the responsibility of the securitization company. All right, next. An ARC needs registration from the RBI for commencement of business. True or false? This statement will be true. So for the registration of ARC, it should obtain a certificate of registration and it should have the owned funds at the time of registration not less than rupees 2 crore or any other amount which is specified by RBI. So this statement will be true. Right of acquisition of financial asset by the ARC is subject to the prior agreements or contract. Is this statement true or false? This statement will be completely false. So if later on, if one bank has already given a loan keeping one property as security, other bank, when the customer approaches them for a loan with the same property being offered as security, the bank should check whether it is encumbered or unencumbered. So it is false. Acquisition of financial asset, ARC, is with the liability also over such an asset. So does the ARC get liability or not? This statement will be false. There is no liability. For each asset acquired or to be acquired by the ARC, there should be a separate scheme for every asset. Separate scheme is prepared and there are trusts who are managing it. When the ARC issues security receipts, the holder is entitled to a dash in the financial asset. The holder is decided to have an undivided interest. Undivided interest in the financial asset. The security receipt issued by the ARC requires registration. True or false? There is no requirement of registration with RBI. After completion, the existing companies, is it true or false? This statement will be false. Any direction issued by RBI under the SARFAESI Act has binding effect. Binding effect means all the parties they have to follow it. So a statutory effect and it is binding on all the parties. This will be the correct answer. So whatever award is passed by the ARC can pass an award after hearing both the parties, or the ARC can pass an award which is ex parte only after hearing one side if the bank fails to provide the documents. Next, enforcement of security interest. After application of the SARFAESI Act, what have the existing companies to do about registration with RBI? They are automatically deemed to be registered. They are required to stop functioning. Existing companies do not require registration, or they have to get registered within 6 months of the commencement of the act. The correct answer will be D. If a new company wants to establish an ARC, first they need to get prior approval and registration from RBI. However, if a company was already, when the ARC gets registration, it is on the basis of certain conditions imposed by RBI. RBI has the power to cancel the registration as well. This registration cancellation can be because of two reasons. One reason, one set of reasons after giving a chance to be heard. Second, without giving a chance to be heard. So the company does not keep accounts as per the RBI norms. The company ceases to carry on the business of securitization. The company fails to hold investment from the qualified investor. The company does not fulfill any of the conditions imposed at the time of registration. So A, C, and D, these can be ratified, they can be corrected. But option B, when the company is no longer carrying on the business of securitization, without hearing, without giving a chance to be heard, the registration will be cancelled. Next, enforcement of security interest. Asset reconstruction means dash by an asset reconstruction company of any right or interest of the creditor in respect of any dash. So what is the meaning of asset reconstruction? The ARC acquires the financial assets of the regulator and regulated entity, and the purpose is to provide financial assistance, right? So AR asset reconstruction means acquisition by the ARC of any right or interest of the creditor in respect of a financial assistance. SARFAESI Act is applicable to the RRBs, true or false? It is not applicable to the RRBs. If we talk about the applicability, enforcement of the security interest, it is not applicable to the RRBs. Mortgage or asset backed debt instrument can be issued to the general public. No. The security interests which are created by the ARC are to be issued only to the qualified institutional buyers. So this is false. A guarantor to the loan is within the meaning of the word borrower under the SARFAESI Act. Is this statement true? Yes, this statement is true. So the mortgagee, the secured creditor, can enforce their action against the borrower and the guarantor as well. SARFAESI Act is applicable only when there's a security. Yes, there should be a security. It should be a secured asset. Has SARFAESI Act defined hypothecation? Yes, the hypothecation has been defined under the SARFAESI Act. What is hypothecation? Wherever a charge is created on the movable asset. On giving a notice of default by the creditor, the borrower gives a reply to it. So when the notice before taking possession, obviously a 60 days notice has to be given to the borrower. And if the borrower claims anything, or they say that something is written wrong in the notice, what will the creditor do? Ignore the notice as the law does not provide for any reply. Wait until the borrower initiates any legal action. Give due consideration to the reply as per the requirements. Take the matter before DRT. The bank should not ignore whatever reply or response the borrower has given. They will give due consideration. On sale of the security interest, the sale proceeds are appropriated firstly. So there's a waterfall arrangement which is followed. So when the property is sold, the security asset is sold, whatever money or proceeds that have been generated will be first used to pay the cost, charges, and expenses for the preservation and protection of securities, insurance premiums, etc. Then later on, for the payment of dues of labor, for the government dues, crown debts, and so on. But first, for the payment of costs and charges for the securitization process, then to the secured creditor. After coming into operation, the provisions related to the central registry, the banks and the financial institution have to register all security interest with the SARSEI. Is this statement true? Yes. So all the charges which are created, modified, satisfied have to be registered with the SARSEI. The period stipulated in the Act for recording satisfaction of security interest from the date of the payment or the satisfaction is what? It is 30 days. Within 30 days, it has to be filed. Duty to report satisfaction of charge to the central registrar is on the creditor or the borrower. It is on the creditor. And if the borrower does not get it, still the penalty liability will come to the creditor. The creditor will make the application, and if they have to pay any fee, that they can recover from the borrower, but the duty is of the creditor. Besides the SARFAESI Act, some other laws require some registration of charge. Is such double registration avoidable? Yes, the creditor can choose under which law he needs registration. No, registration under the SARFAESI Act as well as other applicable law will have to be made, as the SARFAESI Act is not a substitution for any other law. So if any other law also requires some charge to be registered, it will be followed. Just because the SARFAESI Act is there does not mean that the other acts are not applicable. So the correct answer is B. The appellate authority under the Act is appointed by. Who is the appellate authority? We have already discussed the appellate authority, the director in charge of the Department of RBI, and the appellate authority is appointed by the RBI. Can the ordinary magistrate take cognizance of offence under the SARFAESI Act? No. The cognizance of offences. No court shall take cognizance of any offence punishable with relation to this act except upon a complaint in writing made by an officer of the central registry or an officer of the RBI, and the cognizance will be taken by the metropolitan magistrate or the judicial magistrate of first class only. No court below the rank than this can take cognizance of such offences. So this is a very important point. Next, for challenging an action initiated by the secured creditor against a defaulting borrower under the SARFAESI Act, the borrower can go to the civil court for an injunction. False. The borrower will approach the DRT. Under the SARFAESI Act, the borrowers are the first applicant to the debt recovery tribunal. All right. Can a bank take action against the SARFAESI Act under the SARFAESI Act against deposit under lien with it? Can the bank take action? No. They can take action only on the secured asset. Are hire purchase and lease contracts covered under the SARFAESI Act? Again, no, they are not. After the bank's notice, a defaulting borrower has paid within 60 days a substantial amount, and the present dues are rupees 15 lakhs, which is 15% of the claimed amount. Can the bank proceed to take possession of the property? No, it cannot. So these are the miscellaneous provisions. There are certain conditions on which the SARFAESI Act is not applicable, like a lien on any goods, money, or security given under the Indian Contract Act, a pledge of movable goods, creation of security in any vessel, Any conditional sale, hire purchase or lease, any rights of unpaid seller, any property not liable for attachment like agricultural land. Okay, so then we also have the when the borrower is given a notice and the borrower pays within 60 days a substantial amount. Now the creditor will have to stay the proceedings. If on some points of the provisions of the Transfer of Property Act and SARFAESI Act are different, which act will prevail? So if the points are different between the Transfer of Property Act and the SARFAESI Act, like the very point that under the Transfer of Property Act without court intervention recovery cannot be done, the SARFAESI Act will have priority. Okay, the SARFAESI Act will prevail. Can a bank proceed to take action of the security after 4 years of the cause of action? This is false. This is the correct answer is no. It has to be taken within the limitation period. Provisions of the SARFAESI Act are applicable to pledged goods, mortgaged property, securities that are not otherwise charged to the creditors, securities charged to creditors and not in possession of the creditor. So the correct answer will be D. The provisions under security, the SARFAESI Act, the provisions is to take possession of the property. So only when the charged securities are not in the possession of the creditor. When do the rules framed by the central government under the Act get valid? After the appellate tribunal or the DRT approves them, on Supreme Court approving the same, immediately on framing of the rules by the government and notifying the same, when both the houses of the parliament. So the correct answer is D. Not just in SARFAESI Act, in any act, if there needs to be an amendment, there needs to be a new rule. First, the draft will be placed in both the houses of the parliament. When both the houses of the parliament they pass it, approve it, then the rules will be passed. The central government may extend the time for the registration of transaction of security interest or securitization of asset reconstruction or modification for a maximum of 30 days only. So if there's a valid reason because of which the charge was not registered, the period can be extended 30 days at a time. All right. Yes, so this is false. Statement 2. The Income Tax Department considers attaching the property in Jammu and Kashmir belonging to Mr. X for the recovery of tax dues. Is such attachment order required to be filed with the central registry? Yes. Wherever the attaching of property is required, it is to be registered with the central registry where the security interests upon any property in favor of the secured creditor are filed for the purpose of registration. The claim of such secured creditor holding attachment will have priority. This statement is true. So, if there's a secured creditor who gave a loan and other creditors who gave a loan after the secured creditor, they should have checked getting the charge registered is deemed to be a public notice. So the secured creditor will have priority. Last question. Recovery of taxes by government departments will have priority even after the registration of security interest by the secured creditor. This statement is false. All right. So first the secured creditors will recover their dues and then the crown debts, dues to the labor and other employees will be paid. DRT Act is applicable only if the debt recoverable is above dash 15 lakh, 10 lakh or 20 lakh. So the Recovery of Debts Due to Banks Act is also known as Debt Recovery Tribunal Act. It's the same act. So what is the minimum debt recoverable? 15 lakh, 10 lakh or 20 lakh? The correct answer will be option 2, option 3, that is 20 lakh rupees. Second question. The debt recoverable through DRT may be secured or unsecured. So is it important that the debt to be brought to the DRT for recovery, is it necessary that it should be secured or unsecured? Yes or no? It is true. It can be both secured or unsecured. Overdrawn amount in an account is not recoverable under the DRT Act. True or false? This is false. Overdrawn amount is included in the amount recoverable. If a civil court has passed a decree, it has to be executed through that court only and cannot come to recovery tribunal. This statement will be false. So, what is the RDB Act? The constitutional validity of the act, the DRT Act, or the Recovery of Debts Due to Banks and Financial Institutions Act of 1993. Basically, the banks, for them, special courts have been set up, which are known as the Debt Recovery Tribunal and the Debt Recovery Appellate Tribunal. Banks, a banking company or nationalized bank, any bank, if they have an NPA, they need to recover that loan, they can make the application to the DRT. All right. Next, a bank has allowed a current account holder an ad hoc overdraft of Rs 15 lakh. This is a scenario. The amount is due. Whether this is recoverable under the provisions of the DRT Act or not. So, what is the meaning of debt recoverable under the DRT Act? It includes, it is legally recoverable amount by the bank. All right. So the banks, they can recover even an overdraft account if it is due, if it is unpaid. Debt recovery tribunals are established by that. Which authority establishes the debt recovery tribunal? They're established by the central government. The central government establishes the DRT, appoints their presiding officer and other officers. Even the DRAT establishment, their jurisdiction, the chairperson, everything is decided by the central government. The debt recovery tribunal consists benches of 3 persons. This statement is false. The debt recovery tribunal will include only the presiding officer and other officers as necessary for the functions of the DRT. Jurisdiction of the appellate tribunal is with respective high court. This statement will also be false. The debt recovery tribunal, they have autonomy. When we talk about the establishment of the tribunal, the central government is empowered to establish one or more tribunal to exercise the jurisdiction, powers, authorities conferred on them by the act. The central government will decide and specify the area within which the tribunal may exercise jurisdiction, entertain and decide the application. The central government will appoint a person qualified to be a presiding officer, a person who is or has been appointed as a district judge, and their term will be up to 65 years of age or 5 years, whichever is earlier. All right. And the staff of the tribunal, again, one or more recovery officer will be there. Appellate tribunal is also established by the central government with the chairperson. What is the qualification? Judge of a high court. They have been in the Indian legal services for at least 3 years or acted as a presiding officer for at least 3 years. So this is false. Can the order of the central government in the appointment of the presiding officer of the tribunal be challenged in any court? Yes, before the appellate tribunal. No. No, unless the High Court permits for it. Yes, under the Constitution, Article 226, before the High Court. So, can anyone question the central government on appointing a chairperson? No, this decision cannot be questioned. So, the correct answer will be B. No. A decree passed by a foreign court can be executed by a tribunal. True or false? So, can a decree passed by a foreign court be? Yes, it can be. This was decided in the Bank of India versus Harshad Rai Odavji Modi. where the Bombay High Court held that an application for execution of the decree of foreign court can be entertained by the DRT. So this is true. For reasons valid, the chairperson of the appellate tribunal may transfer any case from one tribunal to another within its jurisdiction. Yes. If the application, let's say the presiding officer is incapable to solve it or they're absent, the chairperson can transfer it. So this is true. For the matters for which the tribunal are empowered, the civil court have no jurisdiction. The day on which the tribunal is established, it is known as the date of appointment. From that day onwards, civil courts have no jurisdiction in the area for entertaining the complaints like recovery of debt from the bank. So the correct answer is true. All the three statements are true. Next, DRT jurisdiction for a bank is where the head office of the bank is located. True or false? This statement will be false. The DRT's jurisdiction is determined on the basis of the case, right? The branch maintaining an account in which the debt claim is outstanding or the defendant is residing for their place of work or they actually voluntarily reside there or the cause of action arises, there the application will be made, not necessarily where the head office is located. So this is false. If a bank has filed recovery application, other bank can join the application. If the defendants are same, yes. At any time before the order of final award, any bank to whom the same depositor, same customer owes a debt, they can join the application. When a case gets transferred from a civil court to the tribunal, fresh court fees required no. Because the person applicant has already paid the fee, so another they do not it is not required to pay fee once again. And if the tribunal is able to give a decision, the court fee paid will be returned. So the correct answer will be false, true and false. A counterclaim filed before DRT has the same effect as a. So when a counterclaim is filed in the DRT, it will have the same claim as that of a plaint in a cross suit. Since the RT is not a civil code, it cannot pass interim orders like attachment, injunction, receiver, etc. Wrong. The DRT has the same powers as are given to a civil code. Their awards are binding on the parties involved. The DRT can pass interim orders, they can pass injunction, they can appoint the recovery. So this will be false. A person who has to file appeal before the appellate tribunal has to pay. Now, if a person, the applicant or the defendant, is aggrieved by the decision passed by the tribunal, they can prefer an appeal. It has to be made within 30 days from which the copy of the order is received, and the fee will be 50% of the amount determined by the DRT. It can also be reduced to 25% for genuine reasons. While filing appeal before the appellate tribunal, if any amount is required to be deposited, yes, 50% of the amount determined by the tribunal. No appeal can be made to the appellate tribunal without depositing this 50% or reduced 25% amount. Recovery officers appointed under the RDB Act can attach and sell movable as well as immovable property of the person against whom order is passed, even if the property is not charged to the creditor. So the property not charged to the creditor, it can still be included in the inventory that is prepared. The defendant can raise a plea before the recovery officer about the correctness of the amount. No. The person against whom the action is being taken by the recovery officer cannot be questioned. If there is any issue of misstatement or any wrong calculation, it has to be filed with the DRT. All right. So this is false. If the recovery certificate has a clerical or arithmetic mistake, dash can correct the same. Who has the authority to correct it? The application will be made to the DRT, and only the presiding officer of the tribunal can correct the clerical or arithmetic mistake, not the recovery officer. For recovery, the recovery officer can adopt the same methods as adopted for recovery of income tax under the Income Tax Act. Yes, all the powers that are given for the recovery of income tax are same. They are given to the recovery officer as well. Recovery officer can ask the defendant to furnish by affidavit particulars of the asset, again true. Not only the defendant but also any person to whom the defendant, those who owe money to the defendant. The recovery officer can order them to pay the DRT directly rather than paying the defendant. So the statement will also be true. All right. A company is under winding up process. Whether the High Court permission is required by the bank to proceed against it before DRT. So the purpose of DRT, establishing the DRTs, the DRATs, the RDB Act, was that the banks need not get any court intervention. No time is wasted in court intervention. So, no, the DRT has a special law overriding effect over other laws. So the banks can directly approach the DRT to proceed against the company without the permission of High Court. So we have completed the Unit 18, the Recovery of Debts Due to Banks and Financial Institutions Act. Now let us start the questions of the Unit 19, Insolvency, Introduction to the Insolvency and Bankruptcy Code of 2016. First question. In respect of a real estate project of a corporate debtor, what is the minimum number of allottees who have to jointly file for initiation of CAIRP? 50 allottees or 10%, whichever is less, 100 allottees or 10%, whichever is less, 100 allottees or 20% of the total number, whichever is less. So filing the application for the CAIRP in case of a real estate project, financial creditor, they can with themselves or jointly with others. If it is a real estate project and the application is against the debtor, then not less than 100 or 10% of the number of allottees, whichever is less. All right, an application for initiating the CAIRP against the corporate debtor shall be filed jointly by not less than 100 of the allottees or 10%. All right, so the correct answer is B. How much time is given by an adjudicating authority to rectify a defect in the application of a financial creditor for initiation of the corporate insolvency resolution process against the corporate debtor who has defaulted? So if there is some default, there is some defect, the adjudicating authority, they receive it, then it can be rectified within 7 days. It has to be rectified within 7 days. Next, under the IBC 2016, which one of the following persons or entities is entitled to make an application to initiate the CAIRP? Corporate debtor already undergoing CAIRP, corporate debtor in respect of whom the liquidation order has been made, a financial creditor of a corporate debtor undergoing a pre-packaged CAIRP. So basically, these are the persons not entitled to make application as per the section 11. Any corporate debtor who is already undergoing a CAIRP under a pre-packaged insolvency resolution, or a financial creditor is undergoing a pre-packaged insolvency resolution process, corporate debtor who has already completed a resolution process 12 months preceding the date of making the application, or liquidation has been ordered or a resolution plan has already been approved. or a corporate debtor or financial creditor who has violated any terms of resolution, these persons are not entitled to make the application. So the correct answer will be D, none of the above. None of the above is allowed to make a application. Now we are starting with the unit 20, which is the Bankers Books Evidence Act. As per the Bankers Books Evidence Act 1891, judge means judge of a district court, a first class magistrate, judge of the Supreme Court, a judge of the High Court. So what is the Bankers Books Evidence Act? This act, when the bank is required any book to be established or proven in the court of law, earlier they were required to be produced in original, it was difficult. So the extracts and statement of the accounts are produced. Copies, certified copies are given as per the Bankers Books Evidence Act. So court means the person or persons before whom the legal proceeding is held or taken. Judge means a judge of the High Court. So the correct answer is D. Which of the following persons are not authorized to issue a certificate under Section 2A of the Bankers Books Evidence Act? What is the Section 2A? It contains the conditions in the printout. When the books of the banks are not handwritten and copies are taken by the way of printout, then a certificate by the principal accountant or manager is required to be submitted. But the none of the above. All right. So here the correct answer will be D. None of the above. These persons are not authorized to issue a certificate. All right. Next. A court might order a bank to prepare and produce copies of entries relevant to the matters in issue, accompanied by a certificate that no other entries are to be found. So, when the bank gives copies of the entry, they need to give a certificate that this is the full information. No other entries are there. Everything has been provided. It has to be served dash clear days. 3, 5, 4, or 7. It has to be within 3 clear days. All right, the correct answer will be A. Next, any order made under the Act for the payment of cost or to or by the bank may be enforced as if bank were a party to the proceeding. If there was a cost of application, the cost of doing anything under the order of the court for the purpose of the act will be at the discretion of the court, and it is to be paid by the bank to the party because it was caused due to some fault or improper delay on the part of the bank. So this statement will be true. All right. Next, we are going to practice the questions from our Legal Services Authorities Act, Unit 21, under which the Lok Adalats are established. So the Lok Adalats are organized under the Lok Adalat Act false. They are established under the Legal Services Authorities Act of 1987. Lok Adalats are organized to settle only the existing disputes between the parties. True or false? Jurisdiction of the Lok Adalat could be existing case or even a pending case before any court. For that also the Lok Adalat can be organized. So this is false. If one party intends to refer the dispute to the Lok Adalat, the consent of the other party is not required. This statement will also be false. If it is a pending case before the court and one party wants it to take it to the Lok Adalat, consent of the other party is required, only then it can be transferred. So statement 3 is false. The Lok Adalat shall arrive at a compromise or settlement between the parties. True. The Lok Adalat follow the procedure and they try to arrive at a middle ground. Cognizance of cases. The Lok Adalat will arrive at a compromise. Utmost expedition. When no compromise or settlement could be arrived, the record shall be returned to the court from which the reference was made. Alright, so this is a True statement. There shall be no appeal against the award of the Lok Adalat. Now, this is true. Whatever award is passed by the Lok Adalat, it is with the consent of both the parties. No appeal can be made against it. So, this is a true statement. It is binding on both the parties. It is binding on both the parties. Next, Unit 22, Consumer Protection Act of 2019. Which of the following is not a complainant under the provisions of the Consumer Protection Act? Any voluntary consumer association registered any law, the mediator, the central authority, legal hire, or the legal representative of the consumer. So, who cannot be a complainant? The mediator cannot be a complainant. What is a Consumer Protection Act? Basically, to provide protection of the interest of consumers, to establish authorities for timely and effective administration for settlement of dispute. So complainant could be a consumer association, central or state government, central authority. In case of death, the legal hire or legal representative. In case of minor, the parent or legal guardian. A consumer includes a person who buys a good or service for commercial purpose. False. Consumer means a person who buys the goods and services for their own use. If they are being offered for sale to the public, then it is not a consumer. Right? Consumer will not include a person who is buying the goods and services to resell, only for their personal use. Which one of the following is the chairperson of the Central Consumer Protection Council? The Prime Minister, the President of India, the Finance Minister, or the Minister in charge of the Department of Consumer Affairs. So, when we talk about the Consumer Protection Act, there are various authorities. Like we have the Consumer Protection Councils at central, state, and district level. Then we have the Central Consumer Protection Authority, which is only at the central level. We also have the Consumer Dispute Redressal Commission at the central, state, and district level. Here, who is going to act as the chairperson of the Central Consumer Protection Council? The chairperson will be the minister in charge of the Department of Consumer Affairs. Chairperson of the State Council will be the minister in charge of the consumer affairs in the state government. And in the district council, the chairperson will be the district collector, the collector of the district. All right. That is all from the Consumer Protection Act. Next, we have the Law of Limitation, Unit 23. We have true false questions from this unit. In the Limitation Act, the definition of suit does not include an appeal or application. When we talk about the Limitation Act, what is the meaning of suit? It does not include appeal or application. This is true. All right, various terms are defined, like applicant means a petitioner or any person from whom or through whom the applicant derives his right to apply. Plaintiff, where the plaintiff derives his right to sue. All right, limitation has its own time period and computation of the period of limitation. Next, the defendant is required to set up the plea of limitation if he has to succeed in a suit instituted beyond the period of limitation. Beyond the period of limitation, it is not allowed. All right. If an applicant wants to make an application or suit, they cannot make it beyond the period. It has to be filed within the period of limitation. Beyond will be dismissed. So this is false. Third, a suit is said to be instituted when the plaintiff is presented before the proper officer. Is this statement true? Yes. Acknowledgement in writing gives right. Right. There are certain situations that would give rise to a fresh period of limitation. With, before the expiration of the limitation, the acknowledgement in writing is given, or the payment on account of debt or interest is made before the expiration. So this is true. Fourth statement will be correct. Next, part payment of a debt within the period of limitation entails the plaintiff to compute fresh period of limitation from that day of payment. If the defendant agrees to pay part payment, it will give a rise to the fresh period of limitation. Limitation for mortgage suit is 3 years from the date when the mortgage money becomes due. Is this statement true or false? When we are talking about mortgage, for the possession of immovable property, it is 12 years, and for foreclosure, it is 30 years. So it is false. A suit on demand promissory note can be filed within 3 years from the date on which the demand was made. True or false? So when we are talking about a demand promissory note, what will be the correct answer? This statement will also be false. All right. Demand has to be made within 3 years, but yes, it will be the expiration of the first term of payment. All right. So this will be false. Now let us do the questions from our last unit of module C, unit 24, tax laws. Tax laws. True or false questions are here. So, liability to pay income tax arises on account of residential status. Correct. Doesn't matter whether a person is a citizen of India or not. If they're residing in India, if their source of income is in India, they will be required to pay tax to the Indian government. So, the statement will be true. Residentship, if they have lived in India more than 180 days in the previous financial year, they're earning their income in India. Assessment year represents the period of 12 months beginning from 1st April each year following the relevant financial year. This statement is also true. Financial year or assessment year. See, assessment year is the year in which we pay the taxes. And previous year financial year is the year in which we have earned the income. So for the current financial year 2025-26, this is the previous year, and the current financial year is 2026-27. So for this financial year 2025-26, in the assessment year 2026-27, we will pay the taxes. So this is true. Previous year is the financial year immediately preceding the assessment year. Correct. Income is taxed only on the salaries. Is it true or false? False. Income includes other than salary also. Computation of income includes salary, income from house property, profits and gains from business or profession, capital gains, and income from other sources. So this is false. Income exempt from tax is to be deducted out of the taxable income before computation of the tax. This statement will be false. It will not be deducted. Next, assessment is of two types: summary assessment and scrutiny assessment. This statement is true. When we talk about the assessment, there's the option of paying advance tax as well. When we pay the advance tax, we need to do the scrutiny assessment. The scrutiny assessment will be done, and if there is any discrepancy, it has to be corrected. Partnership firm, if it has no income, need not file a tax return. If a partnership firm has no income, is it not required to file a tax return? No, it still should file. Tax assessed by the assessment officer has to be paid within how many days? 30 days or 45 days. So when the scrutiny assessment is done and there's some change, so it has to be paid within 30 days. Entire advance tax is to be paid by 15th of March. Now, when we are talking about advance tax, it is based on the concept of pay as you earn, right? It is advance tax, pay as you earn. So by June 15, 15%, September 15, 45%, December 15, 75%, and March 15, 100%. So this will be true. Tax deduction is to be made before making interest payment to the non-residents in the NRO accounts. This will also be true when we talk about the deduction or collection of tax at source. It is in the normal day-to-day business activities of the bank. Right. Next question. Tax deducted at source is to be deposited within 1 week from the end of the month in which it is to be deducted. It is the responsibility of the bank to comply with the provision. When the tax is deducted, it is to be deposited to the central government from one within 1 week from the end of the month. Person deducting the tax at source is required to file a quarterly return of the TDS. Yes, a quarterly return is to be filed, and if there is any discrepancy, the bank or the person deducting the tax at source will be responsible to pay it. Non-payment of the tax deducted at source into the government account attracts prosecution proceeding and imprisonment from 3 months to 7 years. All right, recovery of tax deductible at source from the person responsible for deduction and levy of 12% interest per annum if there is a delay. The goods and services tax is a one direct tax false. It is indirect tax. The goods and services tax has subsumed all the indirect taxes, right? So it will be available in the subsequent stage of value addition, and it includes the central excise duty, additional excise duty, customs, the state level entertainment tax, octroi, luxury tax, purchase tax, taxes of lottery, all the taxes levied by the state. So it is indirect. Sen VAT credit can be availed of in respect of tax paid on certain specified input. What is the correct answer? True or false? This is the last question. True or false? This statement will be true. On certain input services, it can be deducted. Fill in the blanks from the alternatives provided. A dash is said to be free when the parties to the contract agree to the same thing in the same sense. We are talking about the Indian Contract Act, the meaning and essentials to form a valid contract. So, contract means an agreement enforceable by law. The rights and the obligations arising out of the contract must be enforceable in the court of law. So, we are saying that a consent is said to be free. A consent, there should be consent of both the parties, and both the parties should give consent to the same thing. A contract without dash is void. Cash, consideration, indemnity, or guarantee. Another important feature of a contract is that it should be made for a lawful consideration. If a contract is made without consideration, then it is void. It will not be a valid contract. A person who makes a proposal is known as dash. So there are people involved. There are at least two people involved to make a contract. The proposal is made by the promisor to the promisee, who is the proposee. So the person who makes the proposal is known as the promisor. A person is said to be competent to contract if he is a major, he is of sound mind, he is a major and of sound mind. So contracts can be made only by competent people. If a person is of minor age or a person is of unsound mind, they are not legally capable to enter into a contract. So a person is said to be competent if he is a major and of sound mind. Next question. Identify whether the following statements are true or false. So A enters into an agreement with B to rob C and share the money. B runs away with all the money. A can file a suit against B to recover the money. Is it true or false? So the contract, Indian Contract Act says that the contract should be made for a legal person. But if the contract is saying to rob someone, it is not legal. It will be a void contract, void ab initio. So it will be a false statement. A cannot file a suit. Next, Mr. X, who is aged 17, can enter into an agreement with Mr. Y, aged 25, to buy a car. Again, if a person is of minor age, they are incapable. Any contract entered into by a minor is void ab initio since the very beginning. A contract is concluded only when the party to whom the proposal is made accepts the proposal. Is acceptance required? Yes. If the party, the promisee, does not accept it, then we cannot make a contract. It cannot be a valid contract. So the statement C will be true. All right. Next. Fill in the blanks. Insurance policies are contracts which are in the nature of guarantee, pledge, bailment, or indemnity. So, what is the contract of insurance? It says that the insurance company will protect the policy holder. The indemnity contract is also the same. It says that the indemnifier is going to protect the indemnity buyer. So, it is known as a contract of indemnity. All the contracts of insurance, all insurance policies are contracts of indemnity. There are dash parties in a contract of indemnity. How many parties are there in the contract of indemnity? There's the policy buyer, the policy holder, and the promisor who gives the protection. What is the contract of indemnity? It is where the indemnifier promises to protect the indemnified against certain acts. So there are two parties involved in the contract of indemnity. Next, identify whether the statement is true or false. A person who is indemnified to recover damages as well as a person claiming the damage. So if a person is indemnified, they can recover the damages as well as they can claim the damages. This is true. Where notice has to be given to the indemnifier as per the terms of indemnity, the indemnity holder has to abide by it to be entitled to the claim. True or false? If a notice is given to the indemnifier as per the terms, they have to be followed. If the notice says that the information about the occurrence of an event should be given within 10 days, it has to be given within 10 days. Third statement, in a contract of indemnity, the promisee is the indemnifier. This statement will be false. The promisor is the indemnifier who is promising to protect the indemnified. The indemnity holder is the indemnified, and the indemnity giver, the indemnifier, is the person when a legal action is taken who protects them. All right, so the correct answer, it is false. Identify whether the following statements are true or false. In a contract of indemnity, the indemnifier is primarily liable. Is the indemnifier primarily liable in the contract of indemnity? Yes, it is true. In a contract of guarantee, the liability of the surety is secondary. This is correct. Now, in the contract of guarantee, there are three parties involved. There is the principal creditor, the debtor, and the third person who is acting as the surety. Only if the borrower or the debtor defaults, then the principal creditor can approach the surety. So the liability of the surety is secondary. The creditor cannot directly approach the surety. So this is true. Anything done for the benefit of the principal debtor is sufficient consideration to the surety for giving the guarantee. What is going to act as guarantee? anything that is done. This is also true. When there are co-sureties, what is the meaning of co-surety? Co-surety means that two or more persons, they are sharing the guarantee given to the person who is the principal creditor. So co-surety, release of one co-surety will not release the other of their duties. This is also true. Principal debtor need not pay the surety after the surety has paid the amount to the creditor. There are two contracts involved in the contract of guarantee. One is the express contract, another is the implied contract. Express contract is between the surety and the principal creditor, that if the debtor defaults, the surety will pay. There's an implied contract. It is understood that if the principal creditor, if the surety has paid on behalf of the debtor, then now the surety will come into the shoes of the principal creditor and they can recover this amount from the debtor. So this statement will be false. It will be incorrect. The surety has the right to recover the amount paid to the creditor from the principal debtor. Fill in the blanks from the available alternatives. Surety is also known as the indemnifier, bailer, guarantor, or the bailee. So in the contract of guarantee, surety is the person who is the guarantor, who is giving guarantee to the principal creditor that if the debtor defaults, that I am going to perform the duty. Liability of the surety is dash that of the principal debtor, coextensive with primary to secondary to. So the liability of the surety arises only if the principal debtor defaults, only after the principal debtor defaults. So the liability of the surety will be coextensive. The creditor cannot approach the surety directly. A guarantee which extends to a series of transactions. It does not stop at a transaction, it will go on, it will continue in the future. Is known as a continuing guarantee, invalid guarantee, irrevocable, or general. So it is a continuing guarantee, and a continuing guarantee can be revoked for the future transactions after giving a notice to the creditor. Surety is dash if the principal debtor is released. If the principal debtor is released by the creditor, the surety is also discharged due to any law or due to any reason. If the principal debtor is no longer liable to the creditor, the surety will also not be liable. Guarantee obtained by dash is invalid. Misrepresentation, consent, agreement, contract. If the creditor and the debtor do not tell the whole terms and conditions to the surety, and with false information they make them enter into the contract, it will be treated as invalid. So any guarantee obtained by misrepresentation will be invalid. All right. Next, identify whether the following statements are true or false. Bailer is a person who delivers the goods to the surety to enable him to give a guarantee. Is this statement true or false? What is the contract of bailment? Bailment means when movable goods are transferred from the owner to another person to be used for a particular purpose. That is the contract of bailment, right? So bailment is delivering of movable asset for a particular purpose. Can the purpose be for the giving of a guarantee? False. It is to be for a purpose, for a particular period to be used in a particular purpose. Bailee can use the goods given by the bailer in the manner as he likes. No. There will be a contract of bailment. If the bailer, who is the owner of the goods, transfers the possession for a particular purpose, for that particular purpose only, the bailee can use the goods. All right. So the statement will also be false. The bailee can keep the goods bailed to him and he need not return the same to the bailor, this will also be false. When the purpose or the particular period for which the contract is created, if it is over, the bailee has to return the good to the bailor as contracted. Given a product on rent for use to another person is known as a contract of bailment. Now, this statement is true. Bailment simply means movable goods are given to another person to be used for a particular purpose. So, it is a contract of bailment. If ornaments kept in the safe locker of the bank are stolen, in spite of due care by the bank is liable to the depositor of the ornament. See, if the bailee, this is a contract of bailment, if the bailee, who is the bank, took all the reasonable care for the bailed goods, still some damage is happening, then the bailee will not be responsible. However, if due to the negligence of the bailee this damage was caused, then the bailee could be held responsible. It is the obligation of the bailee to keep his goods separate from that of the bailor. True. And if the bailee mixes the goods, then after the bailment period is over, at the time of return of goods, it is the duty at their own cost, the bailee will have to separate the goods. Next question. The bailor is liable for any loss if the goods bailed are defective and the bailor knowingly does not disclose the fact to the bailee. True. The bailor has the responsibility, owner has the responsibility to inform the bailee that these and these defects are there, or there's a particular way the goods have to be used. If knowingly the bailor does not share this information and some loss is caused, then the bailor will be responsible. Right? So this statement will be true. If the bailee has rendered any service involving the exercise of labor or skill in respect of the goods bailed to him, he has the right to retain such goods until he receives due remuneration for the services he has rendered. So if the bailee, for the particular purpose that they are using the goods, they have incurred some cost and some compensation has been promised to them, he has the right to retain till that is paid to them. So this statement will also be true. He can keep the goods. For a contract of bailment to be valid, there should always be a contract between parties in writing. Is the bailment contract required to be written? No. It can be an oral contract as well. So the statement will be false. For a valid bailment, possession of the bailed goods with the bailee is a must. This is true. Bailment means that the goods are physically transferred, not the ownership, but for the use. And the goods are now transferred to the bailee for a particular. Let's move on to the next question. Identify whether the following statements are true or false. In a pledge, now we are talking about the contract of pledge. The goods are delivered to be kept as security for a debt or for the performance of a promise. What is pledge? Pledge means when the bailment of goods is done to give a security. So when the movable assets are kept with the bailee, the creditor, to act as a security, the pledge is created. So this will be true. The pawnee can sell the goods if the pawner fails to pay. Yes, the pawner, who is the debtor. If the pawner is unable to pay, the pawnee has the right to sell the goods. They also have the right to retain the goods till they receive the debt that was due. The pawnee can sell the goods without giving notice to the borrower. Now, this is incorrect. The pawnee can retain the goods, but if they want to sell the goods to recover their dues, first they will have to give a notice to the pawner, a final warning that if you do not pay, then we will sell the goods. The pawnee can keep the goods even after the pawner has paid the dues. No. When the pawner validly discharges their duty, they pay the whole amount, principal and the interest in full. The pledgee will have to return the goods back to the pawner. Then they cannot keep it. All right, then they cannot keep it. Last, the pawnee or the pledgee can repledge the goods. Yes, they can repledge the goods to the extent to which they were pledged to them. All right. If the pawnee, they want to keep the goods they want to pledge the goods to another creditor, the value of the pledge created to them was, let's say, 50,000 rupees. Value of the pledged goods in reality is 70,000. They can create a pledge only of 50,000, not more than that. All right, only to the extent to which the pledge was given to them. So that is the correct answer. Which of the following is essential for a valid contract of agency? The agent need not have capacity to contract. The principal should have capacity to contract. The consideration is a must for appointing an agent. See, for a valid contract of agency, both the principal and the agent should be competent to contract. They should have the capacity to contract, and consideration is not required. So the correct answer will be B. The principal and agent both should have the capacity to contract. State whether true or false. The agent is appointed to act as a connected link. Bring the principal into a binding contract with third persons. Whatever a principal, whatever a person can do themselves, they can get it done through the agent. But it should be as per the contract, the rights that have been given to them. So it is true. Under the Indian Contract Act of 1872, a principal could be a minor. As per the Indian Contract Act, can a principal be a minor? No. Both the principal and the agent should be competent. That means they should be of major age and they should be of sound mind. Right? An agent could be a minor as per the provisions of the Indian Contract Act of 1872. False. Next question. By implication, the work done by an agent for a principal is equivalent to the work done by the principal herself or himself. Yes. Whatever contracts are entered by the agent on behalf of the principal are actually the contract of the principal. The principal will be liable. So this is also true. In the absence of a contract to contrary, the agent may retain goods, papers, etc., whether movable or immovable, belonging to the principal. If the agent does not receive the remuneration promised, he has the right to retain or keep the they have the right to retain, they have the right to keep the documents till they get the remuneration. So the correct answer will be true. It is true. Okay. Fill in the gaps from the available options given in the bracket. Dash means the consideration for a sale of goods. What is the consideration? Now we are talking about the Sale of Goods Act. Price, lien, delivery or shares. So when a sale is made, price is to be paid in return for that. It is the consideration. In a Sale of Goods Act, sale means when the ownership is passed to the buyer. Goods as defined under the Sale of Goods Act do not include actionable claims, shares, stock, grass. So the Sale of Goods Act always include movable property except actionable claims. Dashed goods are to be manufactured, produced, acquired by the seller after making the contract of sale. So if the contract needs the creation of assets after the contract is fulfilled, then such goods are known as movable, these goods are known as future goods. And if there are specific identified goods that have to be sold, then they will be known as the specific goods. So the correct answer here of statement 3 will be future. All right. Statement D. Dash goods means goods identified and agreed upon at the time a contract of sale is made. Now, identified goods have to be sold. Such goods will be known as specific goods. So price, actionable claim, future goods and specific goods. This is the correct answer. Next, dash means voluntary transfer of possession from one person to another. Transfer of possession and transfer of ownership is different. Possession could be the physical possession is transferred, which could be returned back. Transfer of ownership means that the ownership, now a new person has the ownership, they can use the goods for any purpose. However, here we are talking about delivery. Delivery means voluntary transfer of possession from one person to another. Now, statement F. When the transfer of the property in the goods is to take place at a future time or to subject to some conditions, such the contract is known as agreement to sell, contract of sale, contract of future goods, or contract of specific goods. So when there are conditions involved, fulfillment of condition, and only after that the sale will take place, it is known as an agreement to sell. It will become a sale when the consideration is fulfilled, when the condition is fulfilled. Last statement. In dash, the ownership of goods is yet to be passed from the seller to the buyer. Agreement to sell, contract of sale, contract of future goods, or contract of specific goods. In which type of contract agreement the possession ownership is yet to pass? It is the agreement to sell. And when the ownership is passed, when all the conditions are fulfilled, then it will become a sale. That will then it will the contract will become a sale. So the correct answer is agreement to sell. Next, state whether the statements are true or false. Equity shares are goods within the meaning of Sale of Goods Act. Can equity shares be sold as per the contract, as per the Sale of Goods Act? Yes, this statement is true. Fixtures can be regarded as movable goods only if they are intended to be severed and sold separately. Sale of Goods Act usually means movable assets only. But those assets that are fixed to the ground, attached to the ground like crops or grass or trees, which will be sold after separation, that is known as, that is also included in the definition of movable goods. So both the statements are true. Fill in the gaps. If the stipulation agreed to between the parties is essential. Now, what is a stipulation? Stipulation means either the buyer or the seller has laid some condition. Condition, if it is important, when fulfilled, only then the contract will be complete. It is known as a condition. That stipulation is known as a condition. A dash is a stipulation collateral when fulfillment of that stipulation is not essential for the purpose. Even if it is not fulfilled, then also it can be accepted by either of the party. Such a stipulation is known as a warranty. All right. There's an implied condition on the part of the seller that he has the right to dash the goods. What is the implied condition? Implied condition means the seller has the ownership of the goods that he is proposing to sell. The seller has the title to the goods. This is the implied condition. So that he has a right to sell. If the sale of the goods is by dash, there's an implied condition that the goods shall correspond with the description. If the goods is sell, the goods can be sold by description or by sample or both by description and sample. Here the goods are sold by description, so it should, the goods will match with the description. If the seller describes the goods of being a particular quality, then they have to be of the same quality. True or false? In every contract of sale, it is implied that the seller has got the right to sell the goods. True or false? It is true. The seller should have the clear title, only then he can sell the goods. So this statement is correct. Second statement, an implied warranty as to the quality or fitness for a particular purpose may be annexed by the usage of trade. There's no implied warranty for the fitness. It should be the buyer should be beware. It is the condition of caveat emptor. Caveat emptor means buyer beware. Before you buy any asset, any good, you should be careful and analyze the goods. Only then pay the price. So this statement will also be true. The seller of the goods is deemed to be an unpaid seller. When will the seller be called an unpaid seller? When the dash has not been paid, when the price has not been paid. There is no dash as to the quality or fitness. There is no implied condition to the quality or fitness. The buyer should be aware, the buyer should be careful when they are entering the contract and buying anything from the seller. Later on, they cannot come to the seller to return the goods saying that it does not match the quality. When the dash is in possession of the goods, a lien can be exercised. So, what are the rights available to an unpaid seller? Unpaid seller has the right to lien, unpaid seller has the right to sell the property. When can the unpaid seller take possession of the good? When they can create a lien, that means they can retain the goods when they have the possession. So when the seller has the possession. However, dash is terminated when the buyer gets the possession of the goods. If the possession transfers from the seller to the buyer, the lien will be terminated. So the lien will be terminated if the possession passes to the buyer. The buyer pays the appropriate price or their agent takes the goods after paying the consideration. Identify whether the statements are true or false. When property in the goods has not passed to the buyer and the buyer becomes insolvent before the price is paid, the seller can withhold the delivery of the goods. Can the seller withhold the delivery of the goods? Yes. Even if the goods are in transit, then also the seller can ask for stoppage in transit. If it comes to their knowledge that the buyer has become insolvent, the buyer is not going to pay. A seller who has accepted a negotiable security as an absolute payment is no longer an unpaid seller. This is also true. The seller will have to depend on the negotiable instrument like a check. They are no longer known as a unpaid seller, and then when the check matures or as per the agreement, they will get their payment. So that is the correct answer. Next, now we are starting with the Partnership Act. Indicate whether the following statements are true or false. If one partner cheats a customer of the partnership firm, then all the partners of the partnership firm are liable to compensate the partner. Partners of a partnership firm are 100% liable to the firm as well as all the other partners. They are mutually liable to each other. So this statement will be true. Registration of firm is compulsory? No. As per the Partnership Act, registration is not compulsory, but non-registration gives certain disadvantages to the firm. It is compulsory to enter into a partnership deed. Again, wrong. The partnership deed could be a written or it could be a oral partnership deed as well. The partners are free to decide their mutual rights and liabilities. Yes, the partners, this agreement should be uh, coherent, consistent with the Partnership Act. If they want, they can increase or decrease the mutual liability of one or more of the partners. They are free to decide it. So this statement will be true. All right. Then a partnership deed can even provide that a particular partner would not take part in the day-to-day business. Yes, such partners are known as sleeping partners. They are not involved in the day-to-day business or decision making of the firm. Consent of all the partners is necessary to change the nature of the business carried on by the firm. There are certain decisions that any one of the partner can take regarding the duties that are given to them. However, to change the nature of the business, consent of all the partners will be required. A partnership at will can be dissolved by giving a notice. There can be partnerships of three types: for a particular purpose, for a fixed period, or at will. So, at will, the partnership can be dissolved. Any partner can give a notice to the other partners. An LLP, a limited liability partnership, can be constituted as per the provisions of the Partnership Act. No, for the limited liability partnership firm, we have the Limited Liability Partnership Act that needs to be followed. A partnership can act out of inheritance, again wrong. In a partnership, the partners, they come together to share the profit, conduct a particular business. Just because it was, let's say, a family, a Hindu undivided family is carrying on, it will not be known as a partnership firm. The contract of partnership can be expressed or it can be implied. This statement will be true. Every partner has a right to receive remuneration. Is this statement true or false? It is false. Partners, they share the profit. They do not have the right to receive remuneration. They can, through mutual agreement, decide to pay one or more of the partners some remuneration. Otherwise, they have no right. It is necessary that all the partners must receive equal profits. It is not necessary. The act says that they should receive equal profit. They should receive profit. But again, they can decide whether or not one person will be given more profit or less. So the statement will be incorrect. It will be false. It will be as per the agreement between the partners. No partner is entitled to use the partnership property for his private purposes. True. Any property acquired in the name of the partnership firm should be used for the purpose of the firm only. It cannot be used for any private purpose. So this statement will be true. A single partner can be authorized to carry on the business and sign on behalf of the firm. See, firm is not a legal person in the eyes of the law. It is an artificial person. So someone will have to sign the document or contract. Firm cannot sign the document on their own. So power of attorney can be given. A single person can be authorized. It will be true. Every partner is liable jointly and severally for all the acts of the firm done while he is a partner. Yes, the partner has mutual agency and liability. They are jointly liable. So this statement is true. Misapplication means taking property or money from a third party, using it for the purpose for which it was not taken in the interest of the partnership firm. See, misapplication means causing harm to the third party. When this is done and third party is harmed, the partnership firm becomes liable to the third party. But if it clearly is mentioned in the agreement that such act cannot be done, still the third party enters into an agreement, then the firm will not be liable. When a person who is not at all a partner in a firm either represents himself knowingly or they permit himself to be represented as a partner of the firm and induces others to give credit to the firm, then such act is known as outsourcing, holding on, holding out, or holding to. When a person is not a partner in the firm but they are agreeing to be represented or they're showing themselves a partner and the firm causes some liability, that person will be known as holding out and the person will be equally responsible for the act of the firm. So the correct answer is C. Next, state whether the following statements are true or false. A minor can be a partner in a firm? No. A minor is incompetent to enter into a contract. A minor cannot be a partner. A minor can be benefited to the admitted to the benefits of the partnership. Yes. A minor can be included in the profit, but the minor cannot be made liable for the acts of the firm. So this statement will be true. A minor is personally liable like other parties to pay the debts of the firm? No. Minor has the right to receive the profit for which he has been admitted into the partnership, but the minor is not liable, only his share will be liable. All other partners are 100% liable, only the minor's share will be liable. A minor who is admitted to the benefits of the partnership firm has a choice when he attains the majority as to whether he wants to continue as a partner or not. This statement is true. So, if the minor was admitted into the benefits, he attains 18 years of age, he has the right to give a notice. Within 6 months, he has to give a notice of his attaining majority whether or not he wants to continue as a partner. If yes, now he will become personally liable. If no, from the date of giving notice, all his liability for the future acts will end. Right? A minor partner on attaining majority has to give a public notice within 15 days of attaining majority. No. The notice has to be given within 6 months. A minor who has attained majority may give notice whether or not he wants to become a partner. This is true. If he fails to give a notice, then automatically he will become a partner, fully liable. And if he gives the notice, then he will not be liable for any future actions of the firm. State whether the following statements are true or false. The partners can mutually agree and dissolve the firm. See, there's a difference between dissolution of the partnership and dissolution of the firm. Dissolution of the partnership means the partners are changing, the firm will continue. But yes, the partners, if they want to dissolve the firm, they have to give mutual agreement to it. So this statement will be true. On the death of the partner, the partnership is compulsorily dissolved? No. Even if all the partners change, even if all the partners die and new partners are appointed, then also the firm will continue, the partnership firm will not be dissolved. A partner of an unregistered firm can file a suit against other partners to get his share of the profit. I told you that it is not important, it is not compulsory for a partnership firm to be registered. But there are certain disadvantages like no suit to enforce a right arising of the contract can be instituted. So, if it is an unregistered firm, the partner cannot file a suit and claim his profit. So, this statement will be false. The enforcement of any right to sue for the matters relating to the dissolution of the firm is not affected. Yes. If the right to sue is regarding the dissolution of the firm, liquidation of the firm, then such thing is not. So such rights will still be there even if the firm is unregistered. All right. The enforcement of any right to the dissolution to sue for the dissolution of a firm or for the accounts of a dissolved firm or any right or power to realize the property of the dissolved firm, it is not affected by non-registration. Non-registration only affects the right that the firm cannot sue a third party and the third party cannot sue a firm due to any right arising from a contract. So the correct answer, this statement will be true. Indicate whether the following statements are true or false. First, you need to see what the statement is saying. You need to check whether it is a correct statement or it is an incorrect statement. So, directors are the actual owners of a company. When we are talking about the Companies Act of 2013 or 1956, it is different from the Partnership Act. In the partnership, the partners own the company and they run the company. In the Companies Act, however, the shareholders who are the members and the directors are different. Directors are involved in the day-to-day functioning decision making, but they are not the actual owners of the company. So the correct answer will be that it is a false statement. Okay, directors are appointed so that they can get involved in the business of the company to run the company. Second statement, a company has to be compulsorily registered under the Companies Act of 2013. Now, this is important. It is important that a company is registered, formed under the Act or the 1956 Act. If it is already established, then re-registration is not necessary. So the second statement will be true. A company cannot enter into contracts in its own name. When we define a company is incorporated, it has a separate legal entity, artificial legal person. It is invisible, intangible, exists in the eyes of the law. It can be dissolved by the law alone, and it has the power to enter into contract in its own name. It can acquire, dispose of property, and the company can also be fined under the provisions of the company law. So this statement will be false. The company can enter into contracts in its own name. The company has its existence separate from its members. If all the members of the company die, then the company has to be wound up or dissolved. Is this statement true or false? This statement will also be false. Why? Because a company has perpetual succession. Perpetual succession. The meaning of perpetual succession is that even if all the members change or die, the company will continue. The insolvency or death of members does not affect the continued existence of the company. In spite of a total change in the members, the company will remain the same entity. So the statement will be false. And the fifth statement says that it is a legal person with perpetual succession. This statement is true. However, it is a legal person. It might have a domicile registered address, but it is not a natural citizen. No provisions of the Constitution of India or the Citizenship Act apply to the company. It can have a nationality and domicile, but a company will not have citizenship. All right. So the correct answer will be as given on the screen. Next, state whether the following statements are true or false. In case of a company limited by shares, the creditors of the company can recover the money from its members if the company is not making profits. Now, when we are talking about types of companies, right? Company with limited shares, company with limited by guarantee, or company with unlimited liability. So when we have a company limited by shares, it has a share capital divided into certain number of shares, and these form the source of funds to the company. Each share has a fixed nominal value, and the shareholder is bound to pay either at the time of allotment or sometimes in installment only this value. They're not bound to pay anything more than the fixed amount on the share. All right. So the liability of the members of the company is limited to the extent of amount unpaid on the shares. So this statement, whether they will be required to pay more, this statement will be false. Right? A member cannot transfer shares in a public company without the consent of other members. The meaning of a public company, it means the shares have been issued to the public. They are transferable, they can be bought and changed on the stock exchange. The marketability and liquidity of the shares increases. No minimum paid up capital is prescribed for a public company. So the statement will be false. A prospectus is generally issued by a public limited company, yes. When it is going public, they want to issue the IPO, then they will do this. All right, so the statement will be true. Okay. Now fill in the blanks with the options given in the brackets. The minimum number of members required in a private company. Minimum number of members that should be there in a private company is what? Whether it is 3, 7, 12, or 2. The minimum numbers is 2. It is 2. The minimum number of members required in a public company, however, is 7. A public company needs to have minimum 7 members. Private company can be formed with minimum 2 members. The maximum number of members in a private company, maximum can be 200. The maximum number of members in a private company can be 200. Okay. Then the maximum number of members in a public company, any number 12, 50 or 15. What is the maximum membership in a public company? In a public company, it will be any number. There is no maximum prescribed for that. A private company should have a minimum paid up capital. In a private company or in a public company, both, minimum paid up capital of rupees is not prescribed. There is no minimum requirement. Last statement, in a government company, the government holds at least dash percent of the paid up capital. The government holds at least 51% of the paid up capital. Right? So I hope these questions are clear. These are clear, right? All the topics that we have discussed. Okay, let's move on. Indicate whether the following statements are true or false. We are still practicing questions from the Companies Act only. Companies Act. There are different parts of the Companies Act. We have discussed about the doctrines, the membership, prospectus, directors, memorandum, and so on. Right? So now questions about the doctrines, the memorandum of association, article of association. In case of a conflict between the memorandum and articles of association. The articles of association prevail. No, memorandum of association is the primary main document which tells the outsiders name of the company, registered office, main clause. Articles is about the internal regulation and working of the company. So if there is anything inconsistent, the memorandum is going to prevail. So the statement will be false. One of the clauses contained in the memorandum of association is known as an object clause. Yes. In the memorandum, we have the name clause, the registered office clause, objective clause, liability clause, capital clause, and the association or subscription clause. The memorandum and articles of a company once registered bind the firm. This statement is true. So everything which is given in the memorandum and articles are intra vires, what the company can do. And something which is not given here is ultra vires. Okay, so the correct answer false, true and true. Right? Next. Now about the doctrines. We have studied about the doctrines of constructive notice, intra vires, indoor management. So whether these statements are true or false. Doctrine of ultra vires lays down that every outsider is assumed to have read the memorandum and articles of association. No, when we are talking about the constructive notice, every company on incorporation have to submit with the documents the memorandum and articles of association, and these are deemed to be public documents. This means that every person who is entering into a contract with the company has not only read these documents, they have also understood each and everything, right? This is the doctrine of constructive notice, not ultra vires. So this is false. Doctrine of constructive notice, the outsiders are not required to see the compliance. This is also false. This we are talking about is the doctrine of indoor management. The constructive notice tries to protect the outsiders, in the insiders, the company. When we are talking about, if let's say there is a contract which is entered by the directors, but it is ultra vires, not given in the memorandum, so in this situation the company is protected. The third party should have given due diligence to the memorandum and article, only then they should have entered the contract. So the constructive notice protects the insiders, the company. So the statement will also be false. Doctrine of indoor management lays down that a company cannot carry on the objects not permitted by the memorandum. Now, indoor management talks about the internal management. For example, the memorandum says a company can enter into contracts for construction material. The article of association says every contract should be rectified by all of the directors. Now, a third party enters into the contract with the company on the construction material, it is valid. Doesn't matter if later on it is found that the directors had not signed it. So the correct answer, all of these three statements are false. Okay, next. Indicate whether the following statements are true or false. Now this is, can a minor, minor be entered? A minor can be a member of the private company but not a public company. Can a minor, we are talking about the membership of a company. What are the ways to become a member? Subscribing to the MOA, allotment of shares, transfer of shares, transmission of shares, acquisitions, joint membership, beneficial owner. So is this statement true or false? This statement is false. This statement is completely false. Who all? Minor is not a competent person. Minor cannot enter as a member. A member can inspect the register of members. Yes. The members have certain statutory powers which cannot be taken away from them. This is one of them. They have the power to inspect the register. In a company limited by shares, the member is liable to pay the full nominal value of the shares, and their liability ends here. True. They're required to pay only the nominal value of the shares, nothing more than that. Nothing more than that. So the correct answer will be true. A company is required to keep its foreign register in India only. False. A company needs to maintain registers, different registers, the place of keeping the register. It should be normally at the registered office, but it can be kept at other place, town in which the registered office is situated, right? And they can be open for inspection. There will be different registers for debenture holders, foreign holders, and accordingly they have to be maintained. So the correct answers false, true, true, and false. Next. Indicate whether the following statements are true or false about the prospectus. About the prospectus. There are no remedies available for misstatements in the prospectus by the directors. Is this statement true? No, this is false. If let's say there is a minor misstatement which can be corrected, it can be corrected, then it will be done. Otherwise not. If there are untrue statements or misstatement or omission that have induced any shareholder to buy shares, then it cannot be rectified. Otherwise it can be. A company proposing to issue a red herring prospectus shall file it with the registrar at least 3 days prior to the opening of the subscription. How many days? Yes, it is 3 days. Red herring prospectus is a preliminary prospectus. It does not give the complete information, and it is issued before the final prospectus. Okay, so this statement will be true. Fill in the blanks with the options given in the brackets. Now we are talking about the directors, how directors are appointed, additional directors, their vacancy removal. The maximum number of directors in a private company. A private company can have a maximum number of 15 directors. Maximum number of directors in a public company are also 15 directors. Minimum required in a public company, minimum required are 3. This is a benefit that a private company has over a public company. Minimum number of directors in a public company is 3. Minimum number of directors in a private company, however, is 2. At least dash of the total number of directors of a public company are to be persons whose period of office is liable to determination by rotation. In this situation, two-third, two-third of the directors They retire by rotation. Those who have served the office for the longest retire. Every public company or a private company which is a subsidiary of a public company having a paid up share capital dash rupees must have a managing or a whole time director or the manager. What is the requirement? What is the requirement? This is a trick question. Actually, the answer will be nil. All right, every company is required. There is no requirement that they have this much paid up capital, then they should have a managing or whole time director. No, company may not have the managing or whole time directors or a manager. Correct answer, it is nil. Additional directors are appointed by the dash. Who appoints the additional directors? The board of directors, promoters, underwriters, or the shareholders. Who appoint them? They're appointed by the board of directors. Board of directors. Similarly, alternate directors are also appointed by the board of directors, and the casual vacancies are also filled by the board of directors, right? So regarding the directors of a company, minimum number we have discussed, maximum we have discussed. We have also discussed the meaning of independent director, who is not related to the company, or their relatives are not related, they're not having any substantial interest, they're not the promoters of the company, its subsidiary or associate company, right? The relatives should not be holding any security in the company it's holding or subsidiary. Okay, the meaning of substantial interest should be clear. Similarly, appointment of directors and their promotion, their retirement in the annual general meeting, all of these points are very important. Now we are starting with the next unit, the next act, unit 29, Limited Liability Partnership Act of 2008. First question. The advantages of which forms of business organization is incorporated in the LLP? Limited liability companies, private limited companies and public limited company, sole proprietorship firm and partnership firm and private limited company, or all business organization. So there are some common features. There are some common features between a partnership firm and the private limited company. For example, partners are to be there, but the LLP is also a body corporate. It has a separate legal existence. Okay, so the correct answer will be option C. Next, state whether true or false. An LLP has perpetual succession. Yes, both a company and LLP has perpetual succession. This means that even though all the members change, the company, the LLP will still continue. It will still continue, it will not be dissolved. The minimum number of designated partners in the LLP is 5. How many designated partners are required in the LLP? It is not 5. What will be the correct answer then? The statement is false. Yes. Designated partners. How many designated partners should be there? What will be the correct answer? At least 2 designated partners should be there, and at least one of them should have the Indian residentship. So the statement will be false. Under the LLP Act, the resident in India. What is the meaning of resident in India? If someone has stayed in India for a period of not less than 182 days. This is the normal definition of a resident in India. So this statement will be true. This statement is true. An individual shall not become a designated partner in any LLP unless they have given a prior consent. Yes, prior consent is important. A LLP may appoint a designated partner within 15 days of a vacancy arising for any reason. This statement is false. All right. When we are talking about the designated partner, we already have the main purpose of the designated partner. They are responsible for doing all the acts, matters, things that are to be required by the LLP, and they will be liable for penalties for the contravention. any vacancy due to any reason and provisions, the LLP may appoint a designated partner within 30 days of the vacancy. So the correct answer will be 30 days and not 15 days. Next, indicate whether the following statements are true or false. Now we are talking about the Unit 30, Transfer of Property Act of 1882. Okay. Transfer of Property Act basically contains provision related to transfer of movable goods. Incorrect. We are talking about immovable goods like mortgage. When a mortgage is created on immovable good, a house, a building, warehouse or land. So the correct answer, this statement is false. Mortgage is a transfer of interest in a specific immovable property to secure the payment of money given by the way of loan. Yes, this is the exact definition of mortgage. So the mortgager delivers possession, or they deliver security interest to the mortgagee. In a simple mortgage, the mortgager does not deliver possession of the mortgage property to the mortgagee. True. Without delivering possession, they bind themselves personally to pay the mortgage money. And if they default, then the mortgagee will have the right to cause the property to be sold and apply the proceeds for the recovery. In a mortgage by conditional sale, the condition is that on default, the sale will become absolute. Yes, it is sold ostensibly. Condition, if default occurs, it will become absolute, the sale will become absolute. But if the mortgager pays, the sale will become void and the property will be returned to the mortgager. In a usufructuary mortgage, the mortgager delivers possession of the mortgage property to the mortgagee. Yes. In the usufructuary mortgage, the mortgagee can recover their rent, recover the mortgage money through the rent and profit arising out of the mortgage property. So the statement is true. In an English mortgage, the property is transferred absolutely with the condition for retransfer. So in the English mortgage also, the property is transferred absolutely. The mortgagee can use the property absolutely, but when the mortgager pays, it has to be retransferred. In a mortgage by deposit of title deeds, the property has to be situated in the notified town. False. In the equitable mortgage or deposit of title deeds mortgage, the title deeds are transferred to the mortgagee in specified towns like Bombay, Kolkata, Chennai. But property can be situated anywhere in India, so the statement will be false. A lease from year to year or for any term exceeding 1 year can be made by the transfer of possession. No. When we are talking about lease, lease can be made for less than 1 year and more than 1 year. A lease from year to year or for any term exceeding can be made only by a registered instrument. All other leases can be made either by registered instrument or by oral agreement accompanied by the delivery of possession. So this is false. A debtor has to be given a notice of the transfer of actionable claim. What is an actionable claim? It means a claim to any debt or to any beneficial interest not in possession. That is, delivery is actual or constructive, which the civil courts recognize as giving relief. Transfer, whether with or without consideration, can be made by the execution of an instrument in writing signed by the transferor, and there is no mandatory requirement of giving notice to the debtor before the transfer of actionable claim is done. So it can be obtained without the transferor's consent, without making the transferor a party to the suit. So the correct answer, this statement will be false. This statement will also be false. Next, a lease for agricultural or manufacturing purpose can be terminated by dash notice to one another. How much time notice is required? If a lease is about agricultural or manufacturing purpose, whether it is 6 months or 15 days. whether it is 6 months or 15 days? The correct answer, yes, the correct answer will be 6 months. It will be 6 months. A memorandum recording mortgage by title deeds is not required. A memorandum recording mortgage by deposit of title deeds does not require what? Registration or stamping. It does not require registration. The essentials of a valid equitable mortgage are debt, deposit of title deeds, and dash. What is required in the equitable mortgage? Apart from it, apart from the deposit of title deeds and debt, the intention to create a security on the title deeds. In case of accession to the mortgage property, where the mortgagee is in possession, then the mortgagee is entitled to the accession. Last, a mortgager, while lawfully in possession, shall have to make dash leases thereof. Can the mortgager have the power to make leases of the property that have been mortgaged to them? Yes, so they will have the power to make the leases. When we are talking about the lease of immovable property, it means that transfer of a right to enjoy the property for a certain time in consideration of a price paid or promise or anything to be given periodically. So the transferor is the lessor and the transferee is the lessee. Right? So the correct answer is E, power. Next, these are multiple choice questions from the Transfer of Property Act. The power of sale without intervention of the court is given to. In which type of mortgage the mortgagee has the power to sell without intervention of the court? Equitable mortgage, English mortgage, simple mortgage, or usufructuary mortgage. This is allowed only in the English mortgage. In other types of mortgage, without court permission, court intervention, the mortgagee cannot sell. A lease for an agricultural or manufacturing process is deemed to be a lease of year to year, which can be cancelled by giving a 6 months notice. All other month to month, and it can be cancelled by giving a 15 days notice only. Right? Next. Next, we have the Right to Information Act of 2005. True or false question? The Right to Information Act was enacted to contain corruption. Yes. This act was enacted with the intent to provide setting out the practical regime so that the citizens can secure access to information. They have transparency and accountability in the working of the public authority. So the statement will be true. The Right to Information Act came into force on 12 October 2005 and it had replaced the previous Information Act. All right. So this statement will be false. It came into effect from 31st October. 31st October. And when it came into force, the Freedom of Information Act was repealed. The Freedom of Information Act of 2002 was repealed. The Right to Information Act repealed the Freedom of Institution Act? Yes. The Right to Information Act applies to all organization. It applies to all public organization, government organization, right? Where let's say central government or any other public authority is controlling it. So the statement will be false. Central public information officers are appointed by the central government. Whether the statement will be true or false, it will be false. When we are talking about the central public information officer, they are designated by the public authority and includes a central assistant public officer as well, right? The appropriate government can be understood to be appointing them. It can be the central government or the state government as well. Okay, next. Public authority means, what is the meaning of a Public authority as per the act. An authority established by the government, an authority established by law, a non-government organization, or any authority or body, uh, institution of self-government established, constituted by the constitution, parliament, legislature, appropriate government. So obviously the definition of public authority is option D. Public authority is option D. All right. Last question. Right to information means the right to inspection of works, documents, record, taking notes, extract, certified copy, taking certified samples of materials, all of the above and obtaining information. So the citizens, they can have right to information in an inclusive manner, any information which is accessible under the control of any public authority. Inspection, taking notes, certified sample, obtaining information. So the correct answer will be D. Right? Next. Now we have the unit 32, the right to information and obligations of the public authority. You need to state whether true or false. Every citizen is entitled to seek information from the public authority. Obviously true. Every public authority is required to display information. Yes. From the day of its being established and incorporated, within 120 days, the particulars of the organization, powers and duties of the officers and employees, procedure followed in decision making, the norms for discharge of the functions, these things have to be recorded and published. All right. So this statement will be true. The central government appoints the central public information officer in every public authority. Already we have covered, it is false. A person seeking information has to disclose the reason for seeking information. No, it is not necessary. If the information can be provided, it will be provided. Central Assistant Public Information Officer has to forward the request for information to the concerned public authority within 5 days of the receipt of the information. Yes. And if, let's say, it is not related to that public authority, the authority that receives the information, they have to give it to the required appropriate authority. And then there's also the time period which has been prescribed within which the information has to be provided, right? Within 45 hours, if let's say it is related to the life or liberty, or in other cases within 30 days of the receipt of request. Next, the request for the information has to be disposed of ordinarily within 30 days, true. And if the life and liberty of the seeker is involved, then within 45 hours. No third party information can be sought from a public authority. The public authority is required to give the information which is with them. But third party information cannot be given. Is this statement true or false? This will be false. It can be given. It can be given if it does not hamper their commercial secret. Or if, let's say, non-giving of the information harms the public, then that will also be provided. Okay. If information requested is not provided, it will be treated as deemed refusal. Yes. And when it is treated as deemed refusal, the reason for the refusal, how an appeal can be made, has to be provided. So this statement will be true. There is no redressal if the central public information officer refuses to provide information. False. There is the right to make appeal if the public officer refuses the information. Okay, they can make an appeal. The seekers can make an appeal. All right. Central government has the powers to constitute the Central Information Commission, and the state government will constitute the State Information Commission, who are going to hear the appeal when someone is not able to submit a request, or their request has been refused, or proper response has not been given. They have been required to pay a fee which is unreasonable, incomplete, misleading information has been given, right? So the appeal can be made. If the appeal is against third party information, Within 30 days, the appellate authority will receive the complaint. Second appeal will lie before the Central Information Commission. Okay, so the statement will be false. The Central Information Commission can recommend taking disciplinary or action against the Central Public Information Officer, yes, if without any proper reason the Public Information Officer is not giving the information, they're refusing it, then penalty can be imposed, disciplinary action can be taken, right? Now we are starting with the unit 33, the Information Technology Act of 2000 and 2000, right? The Information Technology Act of the year 2000. Let us start with the MCQ. The IT Act was introduced on account of the initiatives of the IT industry of India, Indian Parliament, Reserve Bank of India, or none of the above. So the Information Technology Act was created on the initiative of none of the above. Actually, the General Assembly of the UN adopted the model law on electronic commerce adopted by the United Nations Commission on International Trade Law. Then various states, including India, they adopted it, giving favorable consideration to the model law. And then in 2000, both the houses they gave their assent to it, and it was passed by the president. Okay, which of the following is the appellate tribunal under the Information Technology Act? If let's say someone has been refused information or they do not get complete information, then who is the appellate authority? The Telecom Dispute Settlement and Appellate Tribunal established under the Telecom Regulatory Authority of India Act of 1997, right? This will be the appellate tribunal, exercise their jurisdiction, powers, authority given to it by the act. So the correct answer will be A. Any person aggrieved by an order made by the controller or the adjudicating officer can prefer an appeal to the appellate tribunal within how many days? 30 days, 60 days, 45 days, or 10 days. They can make an appeal to the appellate tribunal within 45 days. Within 45 days. All right. Okay, so basically the IT Act, there's the meaning of digital signature certificate, certifying authority, electronic governance, appeal, the critical information infrastructure, application of the act to the electronic check and the truncated check as well. These are very important topics from where questions are asked. So make sure that you revise it. Now let us start with the last unit, last act, which is the Prevention of Corruption Act of 1988. The Prevention of Corruption Act requires that offences be tried by Supreme Court judges, District Court judges, special judges, or the High Court judges. So, who has the power to inquire? For this, special judges are set up. Special judges and special courts. The central and the state government will appoint special judges to try the cases under the Prevention of Corruption Act. They will specify the minimum qualification necessary for their appointment. Cases that may be tried by the special judges where corruption has happened. Okay, so the correct answer will be C, special judges. What is the latest period by which a trial under the Act has to be concluded in all respects? 4 years, 2 years, 6 years, or 3 years? When we are talking about the trial and completion, when the order has to be passed, normally it has to be passed with an extended period within how many days? Within how many days or within how many years? It has to be completed within 4 years. Correct. It has to be completed within 4 years. Who are the eligible persons to investigate? No police officer below the rank of an assistant commissioner in case of the Delhi Special Police Establishment and inspector. In metropolitan areas, the code of criminal procedure should be followed by the assistant commissioner of police. Elsewhere, the deputy superintendent will try the cases. Everything has to be completed within 4 years. Now state whether this statement is true or false. Transfer of suits under the prevention may not be transferred from one court to another. Now, transferability question is related to transfer of cases. It can be transferred from one judge, special judge, to another special judge. It cannot be transferred from a special judge to a civil court. So this statement will be false, right? It may be transferred from one special court to another. What is the maximum period of punishment by imprisonment which may be meted out for the abatement of offences? The penalty, fixing of fine. What is the maximum years? Whether it is 5 years, 8 years, 10 years, or 7 years, it is 7 years. It is 7 years. All right, it is 7 years. Last question. In a metropolitan areas, no police officer below which rank is authorized to investigate the offences? The Inspector of Police, Deputy Inspector General of Police, Assistant Commissioner of Police, or the Commissioner of Police. So in metropolitan area, police officer below the rank of Assistant Commissioner of Police is not authorized to investigate the offences.